All right. So, what is up for y'all watching this on the YouTube replay? We have a lot of stocks to cover, and a lot of stocks report earnings today. AMD, which I do own, Super Microcomputer, which I do own, and Toast. So, we have a bet into these three stocks that report earnings in literally 40 minutes. So, if you're watching this on the replay, you just want to get right to the earnings, skip around 45 minutes into the stream, and you'll see how they do. So yeah, we got AMD position, Supermicro position, a Toast position, and another company that reports earnings that is a very meaningful position to me is ticker symbol POWL, Powell Industries. So this company also reports earnings today, and I have a $2,800 position in this company. So I can't wait to see what happens with them. Yo, what up, Wacky? Hope you're having a good Tuesday. Yeah, what's up, everyone? What up, Dexter? Hold AMD before the 8th, and I'll drop. Hey, yeah, I'm excited for AMD. I actually want to go over AMD, their financials. I want to, oh, dude, Reddit had outstanding earnings. I also want to go over Super Micro's numbers, my prediction on that. And then we'll get into some of y'all's stocks in the chat here. We'll kind of analyze them before earnings because we got earnings in about 35 minutes. So we'll either, you know, we'll either make or lose a bunch from the earnings because we got positions in AMD. So anyway, here's AMD stock. They've had an absolute monster rally since the bottom down here. I'm curious to see what happens right here. Check this out. We obviously know they have a huge GPU market share, 17% PC GPU market share, but they're mainly a data center play because data centers need GPUs and AMD makes their own GPUs. And AMD can get them the newest models for the quickest and at the cheapest price because they own them, they make them. So that's what's cool about that, getting them into the data center business. Huge growth driver. Also, the numbers here, like the profits, the FCF, which is free cash flow, is up 91% year over year. The net income's up 476% year over year. These profits are immense. And also, they have a fortress of a balance sheet right here. No net debt on AMD. So that is one. I'm curious to see what will happen for earnings. Let's see if they continue the growth. Another stock that reports earnings also in 30 minutes is Super Microcomputer. I have 10 shares of this company right here, and this one is mainly done really good. Like if you notice, they reported earnings this day and then they candled up. This huge candle up right here was from a $10 billion contract deal with DataVolt. I don't know, some random company, never heard of them, but DataVolt gave them a $10 billion contract. It made the stock go up by 10%. That's a huge, meaningful contract that they got. So I'm curious to see what will happen with them. One thing we're watching for Supermicro, though, is the margins, because the margins have been struggling hard. So this revenue growth is great. Like, look, they're holding on to the 200% year-over-year revenue growth from the year before, up another 20. But if we go to the net income, it's actually down 72%. So the margins are collapsing because they're giving like customers bulk deals or whatever. I don't know. So we're going to watch the margin number. But anyway, I'm really curious to see what happens with Supermicro. And then the last company that I'll go over, then we'll look at some of y'all stocks. What up, Not Fates? What's up, Rosh? We'll look at DCTH too. I think they report earnings later this week. What up, The Real Jay? What's up, dude? So anyway, Toast is another stock that I own that I'm curious to see what will happen. So I have 15 shares of this company right here. What up, Carmen? Thoughts on Google? What up, Steve? Yeah, Steven. Yeah, we'll look at Google and Open Door too. I'd be careful with Open Door. Yeah. So anyway, here's Toast right here. The stock is pretty much at a 52-week high. So here's what I really like about Toast. This is a restaurant payment processor point of sale system. Like if you ever see those machines at like a food truck that's like, hey, would you like to leave a 10, 20, or 5,000% tip? Most likely that machine and the software is owned by Toast, but there's some other ones as well. But this company just really is impressive on this revenue growth. I mean, it just hits a new record every single quarter, and they're also the most profitable they've ever been. They actually made net income every quarter for the past year when, this used to be a tough buy. They were losing a bunch of net income. So they're the most profitable they've ever been. The balance sheet's fantastic over here. They've actually been deleveraging, went from 41%, the liabilities were 41% of the assets. Now they're only 34% while growing their assets every quarter. So everything about Toast I love. Man, this free cash flow growth as well. Let me actually see the real free cash flow. FCF, yeah, look at this. So just super growthy company. I can't wait to see what happens there. So that's the last company that reports earnings in mine. And also Powell Industries. I won't really go over them right now. But yeah, Powell Industries is another one that reports earnings. No one's probably heard of that stock before. But yeah, I like to take on DCTH, did some research. So yeah, that's a company I own in my Roth IRA. I've been messing around with some like more growthier companies in here. And dang, GHM is down 17% on the day. Luckily, we only have like $100 position in them. DCTH though, DCTH, this company is one that I really like. I'll be quick about this one. I think it'll really impress you. This isn't normally the kind of stock I like to cover and recommend. So because it's so tiny, like if you look right here, the market cap, it's only a $370 million company. So if we're going to buy a micro cap like this, it better have some good fundamentals. So let's go check out the fundamentals here. So remember that they're a $350 million company. And guess what? This is a debt-free company. Absolutely no debt on this company. $60 million of cash. So first off, that takes a lot of risk off the table. The fact that they're debt-free, with 60 million of cash, that's like 30% of the market cap just cash, and they're net income positive now. If we go to the revenue growth, this is the best part. This insane revenue growth. I mean, it's easy to compare to small numbers, but 20 million in the most recent quarter at this growth rate, what's it going to be this time next year? So really good growth. Starting to get net income positive. They made $1 million, made $2 million. So everything is headed in the right direction. So they need to keep that trend up, in my opinion. So I would again, I have a $100 position in them. As much as I like them, I can't put a meaningful amount of money in them because they're so risky, because they're so small. Well, let me go over Google stock. Yeah, what up? Steven said Google stock. And then we got earnings in 30 minutes. We'll go to that. But yeah, Google, I own 19 shares of this company, and we are up 20% on them. So pretty cool. I love Google. Perfect, like in my opinion, buy and hold forever stock. No real reason to sell out of Google, in my opinion. And check this out. I love the fundamentals here. First off, the PE ratio is a 20. The PE is just the net income multiple. So they're trading at 20 times net income for a Mag 7 company. That seems pretty fair. I mean, look at this net income they're making. Nearly 30 billion a quarter now, up 20%. So what is Google doing with 28 to 30 billion of net income every quarter? Well, this is why I love Google, because they're also a huge buyback play. They literally spend like $15 billion in net income a quarter just buying back their own stock. I mean, that's more than some companies that own whole market cap. They spent $13 billion literally just buying back their own stock. And when there's less shares that exist, gives you more ownership in the company. So look, the net income was up 19% year over year, but the earnings per share, your value, because it's per share, is actually up 22%. So that's the power of the buybacks that Google's doing. They're shareholder friendly. They also just started paying a dividend near 0.5% yield. And they're so innovative. Google owns Android. They own YouTube. They have the Google Cloud business, which just took 1% market share away from AWS. Look at this growth on just the Google Cloud business, up 31% year over year. So yeah, Android, YouTube, obviously, they own Waymo, they're in quantum chips. They're like an ETF in one. So Google seems like a great buy and hold forever kind of company. So, yo, what up? Bacon said EOS stock. I don't know if I've heard of this one before. EOS Energy. So they've actually been doing pretty good though. Check that out. Still a pretty small one, a $1.6 billion company. So not great, but product revenue. Let's see. Hey, look at that growth. I mean, again, it's only 14 million, but looks like that's a kind of record amount of sales there. But let's just go down here. So, this is the bad news. So yeah, they have 15 million of revenue, but these are some major losses, like 200 mil, 260 mil, and they have more liabilities than they have assets. This is the opposite trend of what you want to see. The assets are staying the same, but the liabilities are growing. It's 400% of the assets. So this one might have some real bankruptcy risk. I mean, they're a $1.6 billion company that's losing, 200 mil, so it's tough. They can't keep that trend up. We want to see them kind of get net income positive. But the revenue growth is good, but it's still small, 15 mil. So yeah. AMD, we get reports earnings too. Yeah, we'll check out Lucid too. Nafate said, can you check Amazon at this price? Guess what? I forgot to mention, I bought some stocks today, and one of the companies I decided to pick up was one more share of Amazon. I'm like, hey, I like the valuation here, so I decided to buy one more share of Amazon. That's that little buy order right there. So bought one more Amazon today. The earnings were good, except the AWS showed a little bit of slowing growth, but I don't think it justifies this huge downtrend. I mean, the company beat on every metric. If I go back up here, they beat on revenue, they beat on net income by a huge margin, and on EBITDA. So triple beat on Amazon, but it was, in a year from now, people won't care about this. But this is incredible. The margin growth of Amazon. This is kind of the story of Amazon right now, their margin growth. So yeah, huge revenue, by the way, 167 billion just in the past 3 months, up 13% year over year, but the net income's up 34. So that means they're growing their margins. Amazon now is double-digit margins. It used to be tough. It used to be single-digit. Used to even be negative. So they've really just grown their margin the past couple years, and it's incredible. One thing that kind of spooked investors as well was this huge CapEx number. Cash from investing activities was negative 40 billion. So they invested 40 billion in new assets, maybe new property, acquiring a company, whatever money they're investing in the company to try and get a return on it. So huge CapEx number, probably the data center GPU spend. So yeah, what website are you using? Hey, this is actually a broker right here, software. If you want to get it, it's in the link tree in my bio. It's that first link there. But yeah, AWS is huge on Amazon. So someone said Lucid. I don't really like. I feel bad if you own this one because this isn't one that I'd like to own. The good news is the stock Uber just bought $1.2 billion worth of cars from Lucid. And that's what this huge pump was. Uber buying $1.25 billion worth of cars. But I don't know if that's going to save the company because here's the bad news. They're a $7.5 billion company, and look at how much they're losing every quarter. 300 mil. I mean, that's over 5% of the entire market cap. 400 mil, a billion just this quarter. I mean, that's 1/7 of the company. So the trend is getting better. So that's the good news. So we really want to see these losses start to narrow. And the other bad news is they're diluting the life out of you. You've been diluted like 12% year over year. They've issued shares while the stock's at all-time lows. So Lucid's a tough one. We just want to see them finally start to make some profits. But it's a tough business. Brendan said XERS stock. What is this one? This is a pharmaceutical one. So, hey, looks like the stock is doing pretty good the past couple months here, but still not close to all-time highs. But let's go analyze them. So, a really small one, $880 million company. So let's go check them out. So Recolev. Oh, I've heard of this company actually. So yeah, this one has some really good growth. And this is why I might actually like this one. Look, Recolev revenue's up 140%. I mean, look at these year-over-year growth rates. Again, easy to grow small numbers, but really good growth on Recolev. This other one's up 25% year over year. So both of their main prescriptions or whatever are growing. What about this one, Kiev? So this one's declining a little bit, but still huge growth on the Recolev, whatever it's called. And so revenue growth is good, but they're still struggling to get net income positive, but it's not too big of a deal because they're not losing that much. Only 5 mil, 9 million. They are leveraged, so that's one thing I would be a little concerned about. They do have more liabilities and assets, but hopefully they can grow out of this. I think I can kind of see the light at the end of the tunnel. I can see why this one's done so good the past couple months. Really good growth, getting closer to net income positivity, but they still have a lot of debt they got to pay off. I mean, I think they might like one third of their market cap is debt. Not too bad. What's up, bro? Any thoughts on Lucid? Hey, yo, Francisco, we just looked at Lucid. If you want to rewind like literally 2 minutes in the stream. Michael said PFE earnings before the open tomorrow. Outlook was that BDC. Yeah, what up? Let's go look at Pfizer stock. So this is like your healthcare company. They were huge during COVID, but they own some random other prescriptions, like they own Viagra, for example. But this one's kind of a dividend play right now. So check this out. If you look at the dividend, they have a 6.83% dividend. So a really nice yield. The CEO came out and said that they're committed to not cutting their dividend. But here's the thing you really want to watch. They were struggling last year, but now things are starting to get better. They need to keep this up. We're going to go see how much exactly their dividend cost to see how much they need to be making. So in the most recent quarter, they made $3 billion of net income. So kind of remember that number. In the most recent quarter, they made $3 billion of net income, and the dividend cost $2.44 billion. So they at least need to make $2.4 billion of net income every quarter to afford the dividend. So we want to see the trend start to improve. But yeah, that's interesting one. I don't know if that one will really outperform in the market. It hasn't been doing too. Yo, someone said Apple stock. Yeah, let's check out Apple. So, that's wrong ticker symbol. AAPL. So I love this company right here. Another like great buy and hold for the long run stock. Yeah, we can look at PayPal and Alibaba. I want to get to all these. Sorry. And then in 25 minutes, we have earnings from Supermicro and AMD and TOST. And I own all three of those positions, so we'll kind of see what happens. So here's Apple stock. This is one I love to analyze because the fundamentals are so good. They're trading at a 30 PE, for one of the largest companies in the world, third largest. That's historically in line with what it normally trades at in terms of a PE ratio. But check this out right here. I want to show you also the smartphone market share. So Apple has a huge market share. Oops, sorry, there we go. disconnected the phone. But yeah, 19% smartphone market share. Very nice. Literally half the revenue comes from the iPhone. So iPhone's 47% of the revenue. Then they have the services business. So whenever you go spend $100 in the App Store, $30 of that goes back to Apple as a high margin service fee slash royalty. It's like 100% margin for them. And look at the annual services growth. I mean, for the full year 2024, it was nearly 100 billion of revenue. So the services revenue at Apple has really grown like crazy. They own, of course, MacBook sales. That's 8%. They got the iPad. But yeah, here's also why they're a bit affected by tariffs. Only 36% of the revenue comes from the US. Then they're in EU, China, and all that. But yeah, Apple's another company that does crazy buybacks. Let me show you this. So they made 25 billion nearly this quarter. You go to the cash flow statement, you scroll down here to the buybacks, and largest buyback program out of any public company. They're spending nearly 25 billion every quarter buying back their own stock. So another super shareholder friendly company. So yeah, net income's up 9% year over year, but your return as a shareholder is actually 12% because of the share buybacks. Makes the there's less shares that exist, so the net income is spread out through less shares, gave you more ownership, gave you net income and all that. So yeah, that one dude, GHM tanked like 17%. It was rough. Yo, what up, Joshua? Um, let's see. Eric said, actually, I wanted to get to this stock first. BABA, Alibaba. So this is like your Chinese Amazon kind of. They're an e-commerce play. They own AliExpress, if you've heard of them before. Kind of like a Temu kind of site. But anyway, let me show you what I like about this company. First off, they're Chinese, so that's why the PE is going to be so low. So they're trading at a 15 PE. That's in line historically what they normally trade at. And the best part is actually the net income they're making. And this is in USD. They're making like, if you kind of average it out here, like 4 billion of net income every single quarter. So the net income's really good. They're also a nice dividend play. You get in your 1% dividend, low payout ratio. So yeah, they're basically a Chinese Amazon kind of play. Is Toast a good swing trade today? Well, I mean, you're kind of betting on earnings if you buy Toast. Oh yeah, we were just looking at them. I do own this. So here, I'll go ahead and tell you in. Oh man. Oh, all right. Sorry, man. My Wi-Fi is terrible. So that's great news. All right. So anyway, we're back. This is what I wanted to show you. Here are the stocks that I do own. Check this out. So that report earnings today. AMD reports today. So we do own 11 shares of AMD. They report earnings. And also I own Super Microcomputer, not a huge position, but we got 10 shares of Super Microcomputer. And we got 15 shares of TOST. This is that restaurant payment processor company. So those are my earnings. So yeah. Yo, Zio, thanks so much for the rose there. I really appreciate that. I hope you're having a good Tuesday, by the way. Sorry, man. If the stream's lagging, it's not you, it's me. So I do apologize there. I'm not happy. What about CleanSpark? I think what's the ticker symbol for that company? I don't know the ticker symbol for that one. What do you think about Nvidia for the rest of the year? Yeah, let's go check out Nvidia stock too. So if the Wi-Fi allows it. So Nvidia stock. Man, this is not good. I might have to reset my kind of phone connection here. All right, so Nvidia stock. Actually, yeah, let me do that real quick. Give me 1 second. Might as well do this before earnings. Might as well. Just give me 10 seconds here and we'll be right back to the stream. I do apologize again, man. This never happens, but of course it happens now. All right. I just sold SMCI. Hey, you must have made some good money because Supermicro's at like a new 52-week high today. Cookie said, what are your thoughts on Amazon? Is it a good long-term buy? I think it's a good long-term buy. I actually bought a share of Amazon today. But anyway, let me analyze NVIDIA for you. There we go. So let's see. Here's what I love about them. Obviously, we know they sell GPUs. They have a 20% PC GPU market share. But anyone hear about the $1.2 billion Lucid Uber deal? Well, those Lucid autonomy cars are powered by NVIDIA software. NVIDIA actually has their own automotive software that kind of competes with Tesla. But here's the best part about NVIDIA is just this profits that they're making. I mean, this is nuts. They're making like 20 billion in net income a quarter. It's just going to continue to grow. The high capex from Meta, Amazon, and Google, a lot of that's going to NVIDIA. And yeah, dude, just crazy good balance sheet. Cash from operations is crazy. So what's the free cash flow? It should be like 22 bill or 26 billion. Geez. So yeah, NVIDIA is another buy and hold for the long run. I don't know how too much upside is left, but yeah, I do like that. Powell dropped to the past three earnings. If it dips, I'll consider. Yeah, I can't wait for Powell earnings today. Oh, CleanSpark is CLSK. Okay, so this is CleanSpark. I believe this is just a Bitcoin mining company. And the unfortunate part is that this stock just hasn't really kept up with the price of Bitcoin. So yeah, look at this. We can just see 100% of revenue comes from Bitcoin mining. So that's what the company does. You mainly just go to the balance sheet for this company to see how much Bitcoin that they own. But yeah, to be honest with you, I'd probably rather just own Bitcoin because these Bitcoin mining companies don't usually outperform. But yeah, here, Cookie Monster. Also, I'll show you this. Here's the share of Amazon I bought today. Um, yeah, I've been kind of dollar cost averaging into Amazon. So yeah, we bought one share right there today. So yeah, another share I bought today was another share, ticker symbol COKE, Coca-Cola Consolidated. One more share of them. And then a stock that I wouldn't really recommend anyone touch, but I did buy another. Oh, dang. Look at that good timing. We bought a share this morning and it tanks. So yeah, anywho, bought $8 worth of shares. If AMD dips, I'm buying. Yeah, I can't wait for AMD earnings. Yeah, hey, sorry about the lag. It should be better now. So let's look at PayPal too. So PayPal, I love this company, but I just don't know if it's going to outperform the market in the long run. Apple said, what app is this? Hey, I'm actually on a broker of software right here. If you want to get this little software I'm on, it's in the link tree in my bio, that first link there. Oh, Lyft. Hey, Jeff Mack. Hey, do you own DigitalOcean or DOCN, Jeff Mack? That one did great today. But yeah, the PE has collapsed on PayPal. So like lowest PE ever. They're trading at like a commodity multiple, 14 PE, where they're like not really expected to make or lose you any money. But look at this. This is kind of the why I think the PE has started to fall a little bit. DOCN is so awesome right now. Hey, nice. So yeah, right now they're making $1 billion in net income a quarter. So that's great. They're making just over $1 billion of net income a quarter. But if the sales will load here, um, the sales are, yeah, so the sales are only up 5% year over year. So they're kind of at this mid-single digit growth. Like revenue was up 1% last year. So we want to kind of see the growth come back to the sales, but the net income's been pretty strong. And what is PayPal doing with all that net income? Well, they're basically just buying back their own stock every quarter with it, spending nearly 1.5 billion of that net income every quarter, just buying back their own stock. So if you go to the EPS right here, this has been the real winner. So the net income's up 11, but your shareholder return as EPS is up 19%. Thanks to the insane buybacks. They have literally bought back 8% of all the shares that exist. So PayPal right now is kind of like a buyback play. So that's interesting. All right, portable charger. All right, so thoughts on buying STM Electronics. I don't know. What's the ticker symbol for that one? I don't know what that is. Maybe the ticker symbol is STM. You know what? I'll check it out. STM. STM, okay, yeah, here it is. So let's check out this company right here. So a $22 billion market cap. Let's check it out. They haven't been doing too well. So they do analog, micro, uh, electromechanical systems. But this is the bad part. The growth isn't good. Like it's actually negative. So the year-over-year growth is negative 15% on that business. But I like how diversified that they are. Let's see how their embedded processing revenue is doing. For you, what are some indicators for you to look at to fully commit about? Just really good growing fundamentals. Yeah, this business is down 6% as well. Dang, that one's down 22%. So this company kind of just lost the growth. Oh yeah, so look at this. Revenue's down 15. Net income went negative. No way. So that's kind of why I think the stock has been struggling. Yo, no way, mouse with the Christmas tree. No, or the dinosaur. No way. Thank you so much, Mouse. I hope you're having a great Tuesday. Yo, and very soon, in literally 15 minutes, we'll get earnings from AMD, Super Microcomputer, and Toast and Powell Industries, and then we'll see how they are doing. So, yeah, I do own them, so we'll see what kind of happens there. Bro is not FINRA certified. You are right. I'm not an expert. None of this is financial advice. I'm just on here giving my opinion. And I sell nothing, by the way. I don't have a course, book, Discord. I got nothing, man. So let's see. IREN. Oh, that one's seen like a lot of growth recently. I think this one might be crypto related. I don't remember. But I remember the growth being crazy here. So yeah, if we go to revenue, yeah, look at this. This is what you like to see here. Revenue's up 166%. So the revenue's more than doubled. And they made $25 million in net income and 20 mil last quarter. So they're profitable, growing like crazy, really good balance sheet. So I can see why IREN has been doing so good lately. Yo, Mouse, if you got a stock you want to look at, let me know. Thanks so much for the roses again. Yo, Grayson said, how about SFM, Sprouts Farmers Market? This is actually my most recent YouTube video. If y'all want to support me, go to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio if you want to see it there. But just type into YouTube Nathan Robert. I just made a YouTube video 20 minutes ago, and I went over Sprouts Farmers Market. But I'll kind of show you what I love about this company. This is the best part because for grocery stores, you really want to focus on the net margin for these grocery stores. And I want to show you this. So like for Kroger, like they have like 1 to 2% net margins. So this is a healthier grocery store that's been able to grow their margins an insane amount. So check this out. They now have a 6% net margin, grew 20%, 8% net margin. The net income is pretty ridiculous. Over 100 mil a quarter now, up 40%. So pretty crazy good. Yo, what up, Soul Ranger? Hey, how long? Hey, I started investing the day I turned 18. I started with just a couple $100. Best tech stocks for an 18-year-old to hold in their Roth IRA. Yo, Steven, tech stocks. I mean, Google, Meta, Amazon. Those are great picks. I want to learn, but I'm not learning from. Yeah, hey, what's up, man? So let's see here. What about ASML? Yeah, Nardo. Let's check out ASML stock. This is kind of the lithography company. Oh yeah, then we can look at Tesla too. Yeah, we can look at Tesla. I'm gonna be buying a Model S Plaid to refresh here in a few months. Hey, if you're gonna buy a Tesla, why not buy some of the stock? We'll go analyze Tesla after this. I got you. And then in 10 minutes, we got earnings, so that'll be fun. So here's ASML. This one's been struggling. NVIDIA's at all-time highs, Taiwan Semi, AMD's been doing really good, but ASML hasn't. And it's because of the guidance they just gave. They basically gave guidance for the next year of showing basically no growth, like low single-digit growth, which is why the PE collapsed. Actually, let me go back up to the PE right here. Look, this is like the lowest PE they've ever traded at. The historical average is a 41. And they're at a 25 right now. So lowest PE ever for this company. They also triple beat on metrics, but again, it was the guidance that really hurt them. So revenue's up 35, net income is up 86. So incredible net income growth. That means they're expanding their net margin, which is great news. Yeah, look at that, 35% net margin. So let's see what app are you. Hey, Benji, yeah, this is a broker I'm on. If you want to get this software that I'm using, it's in the link tree in my bio, that first link there. It's an affiliate link too, so it'd help out. But let's look at Tesla right here. I'm not going to... So I don't love this company, to be honest with you, because of the valuation. Yeah, hey, so I don't really trade much. I mainly just buy and hold gray stocks for the long run. So anyway, here's Tesla right here. If we judge this company the same way we would any other stock, it's a tough buy. And most of the premium valuation, like they have a high valuation. What is it? 184 PE versus the 24 industry average. The PE, again, is the net income multiple. So they're trading at 184 times net income. They can have a high valuation if there's a lot of growth. And the growth is being priced in from the future revenue from robo-taxis and robots and stuff like that. But for right now, it's a tough buy paying that premium because they kind of lost their growth. The main segment of revenue, 87% of the business is their car sales. The automotive segment is down 12% year over year. This includes FSD revenue and all that. The high margin FSD revenue down 12%. Also, the energy business is down 7% year over year as well. So it's tough because they just lost their growth. They also had a little shenanigans at the net income. They only made like really $700 million in net income. So the margin just fell. The margin was slightly actually lower than 5%. So it's tough buying Tesla for me to personally pay that premium valuation right now. So I just stay away from it. I just will buy another company. Yeah, love the car, don't love the stock. Yeah, good product. Use Nathan. Can you guys explain the SEC? Yeah, hey, I'm not too sure what you're talking about there, Soul Ranger. Try not to spam, but yo, I appreciate you being here. Let's see. Every time I've bought Tesla, it's done bad. I just don't know if that'll be a huge winner. Like it's already a like $800 billion company. For you to double your money, you'd have to go to like 1.6 trillion or whatever. So someone said NVO, Novo Nordisk. So this is the company that owns Ozempic, that weight loss prescription. So this is a play if you want to get exposure to weight loss prescription products. And like, check this out. Literally 95% of the revenue is their obesity care products. Pretty cool. 60% of the revenue comes from the US and then all these other countries. But they gave bad guidance, and they also said that their Ozempic patent expires in a few years. So that's the bad news. But for right now, companies printing money, doing great. I mean, $4 billion the most recent quarter. get a nice yield of 3.4% dividend. So NVO is really interesting at this price. I think it might be worth a nibble here, but again, I don't think you want to put a meaningful size position in that one yet. I still have some of it on the split. Oh, Nardo, you must be up a bunch. Yeah. Um, let's see here. I don't know what the SEC search thing. Are you talking about like the SEC filings of like Nancy Pelosi and like Warren Buffett? We can pull that up too. But yeah, like right here, we can see the Pelosi tracker on this app here. And these super investors have to make their trades public by SEC law. So we can see every trade, every option Nancy Pelosi did, and all of her portfolio as well. What holdings, same with Warren Buffett, same with some of these other super investors as well. So yeah. Yeah, it looks like Mouse. It looks like that's really just being priced in right now. That's why it might be worth nibbling on NVO. It looks like it's being like so priced in, like the NVO is like heavily suppressed. But again, I wouldn't put a huge meaningful position. Which happens, yeah, hey, user 41. Again, this is a broker right here. If you want to get this little application I'm using software, it's in the link tree in my bio. First link there. It's free and it's affiliate link too. So anyway, let's see here. We'll look at one more stock and then we're gonna go to the earnings, which are in 8 minutes away from earnings. We get AMD, SMCI, Powell Industries. Can't wait to see what happens. Someone said Coinbase stock. You know what? I think that's a company owned by what's her name? Kathy Wood. Let me go to Kathy Wood's portfolio and see if she owns Coinbase. Yeah, so look at this. Coinbase is 6% of her portfolio. Then she got Robinhood. Man, Robinhood's been crushing it. Incredible. So yeah, Coinbase, dang. So yeah, they're gapping down another 6% today. So they did have some rough earnings, to be honest with you, but there was some good news. Like, check this out. This is a really cool stat right here. This is their monthly transacting users. So not just like monthly users, but monthly transacting users. It's 8.7 million, up from last year, 8.2 million. So they gained like a good amount of active users, but the reason the stock fell was because of this huge EBITDA miss. They had a little one-time adjustment to their net income. It wasn't really this high, but so you go to the EBITDA, they were expecting 300 mil, but they lost 25 million. So that's kind of why they had that initial gap down. We can also see this from the operating profit. It went negative this quarter. I think that kind of spooked investors. So it's the financials that are hurting this one, though this is a Bitcoin proxy. I mean, look at that. They're down like 15 candlesticks in a row. Unfortunate. Might be worth looking into, especially if Bitcoin keeps going back up. Someone said commenting for engagement. Hey, what up, user 803? I appreciate you, man. Let me go to the earnings real quick. So here's my bet into earnings. So here are all my positions. We got 11 shares of AMD. AMD in 10 minutes is either going to go up or down a bunch from earnings. We also have Super Microcomputer, 10 shares of them. It's been a great performer. We're up 818% on them. Finally, TOST, TOST. That's the other stock that reports earnings today. So yeah. By the way, I did buy a few things today. I bought some PGR Progressive Corp. We got 3.8 shares of them now. We also bought a share of Amazon today. Decided to buy at the dip on them. Why not? Amazon fell on earnings, so I decided to buy one more share of them just to load it up. Would you ever consider investing for people I trust you? But no, not right now, Mouse. So again, let me just say, watch out for people impersonating me. I don't sell nothing. I don't have a course book, nothing. And if you follow me, you might get followed by some impersonating. So be careful of that. So thoughts on AMD for earnings? Yeah, we'll get to AMD earnings in 5 minutes here. I can't wait to see what happens because I do own them. So Jason said thoughts on PANW. That's a huge cybersecurity stock, and Nancy Pelosi owns this one too. So it's 1.7% of her portfolio is in PANW, Palo Alto Network. So if you have no exposure to the cybersecurity industry, I'd recommend checking out this company right here. So check this out. This is the one thing I love about this company. I love subscription model companies. And look, half the revenue comes from their subscription, and it's seen just insane growth. I mean, this is kind of the stock I want to hold forever. It kind of just hits a new record every year. So subscription revenue is doing great. They're printing free cash flow. I mean, 500 mil plus a quarter, 2.5 billion a year. The net income is 200 mil plus a quarter. So great earnings. I think that's a good one to buy and hold forever. Yo, what up, SL? So yeah, go find Nathan will not cover. Oh yeah, that's true, Jeff Mack. I can't. There's some sectors I can't cover. TikTok takes down the stream, which I can understand. But PANW is a nice one. What about CrowdStrike? Yeah, CrowdStrike too. There's still CrowdStrike's net income is still negative from the lawsuits. So CrowdStrike is still seeing some lawsuits from that huge update where they gave this update. There was a huge outage. It made every plane in the entire United States have to go and land uh, because Windows computers weren't working. It was a huge so this huge net income losses are from lawsuit payouts. But anyway, a lot of they're getting sued by a lot of people. But looking that aside, that's an incredible company, probably the best cybersecurity one out there besides PanW. Cloudflare's cool. Yo, Wassinator, what's up, man? Good to see you. Yeah, 5 minutes away from earnings. We can't wait. And someone said Palantir. Let's go look at Palantir. I think they reported this morning. I think they did really good, actually. Yeah, wow. They're up 7.8%. Let me go see what the earnings were because they must have been good. So, yeah, wow. So a billion of revenue, the huge beat on net income. That's huge. Is it updated here? It is updated down here. So awesome. So let's see. Yeah, the revenue's up 48% year over year. Incredible. Net income was a record 330 mil. What was the net margin? 33% net margin. Incredible. So as we know, a lot of the revenue comes from the government. Wow, it updated here too. Government revenue's up 50% year over year. The growth continues. And let's see what their commercial revenue did. Up 46%. That's the highest growth rate we've seen like ever on the commercial revenue. So Palantir, just ridiculous growth, man. Also, fortress of a balance sheet right here. No debt. Let's see if their cash grew. Yep, grew 50%. So they went from 4 billion of cash to 6 billion of cash in the most recent quarter with no debt. So yeah, Palantir crushed it. Jeez. I said PANW. Pinnacle West though is a cool one. PNW. This is a actually I'll pull up. Oh, Zscaler too. Yeah, we'll look at Zeta earnings too. Do you own any AMD? I do. I'll show you my AMD position right after this. But yeah, PNW, this is Pinnacle West. This is a utility company that has seen a lot of demand from data centers, and they have a nice little yield. It's a utility, a 4% dividend. Why am I getting? Yeah, I don't know what you mean there, X. But let's see here. Yep, 3 minutes away from earnings. It's Leo said NVO is making me sad. Yeah, man, that sucks. I saw them. Just they're down another 3% today. They picked up more contracts. They're on fire. Yeah, nice. Yo, what up, Eric Z? What's up, man? All right, we're a couple minutes away from earnings. I'll show you my AMD position. Someone asked. Yeah. So again, here are my positions in the earnings. We got AMD, Supermicro, and Toast. Actually, I'll show you everything that reports earnings today. There are some other companies that I don't own that are popular that report earnings. But let me go to the earnings hub right here, and we can see what reports earnings is Tuesday. So let's see. Who's in 3 minutes for earnings? AMD, Supermicro, and Toast. So here's Tuesday. Yeah, tomorrow's huge as well because we own Disney, we own McDonald's, and NVO reports earnings tomorrow. So the person that said RIP my NVO position, just know they report earnings tomorrow could make a difference. But anyway, here's today. Let me just sort it by my watch list so it doesn't have the weird stuff. So AMD obviously reports, Caterpillar, Arista Networks, that's a popular one, Supermicro, Toast, Stera Labs, Lifetime Fitness. Has anyone heard of this gym before? They're publicly traded, and there's their stock. Looks like they're down 10% on the day. Maybe they reported pre-market. Oh, they did report already. Okay, yeah, I'm slow. Zeta or Zeta, whatever reports earnings. This is one I really like, has really good financials. I think it's like pretty undervalued right now. Like the revenue growth is good, 35% revenue growth. They're super close to net income positivity, really good balance sheet as well. So I'm curious to see. And then finally, Powell Industries, POWL. This is where I bought the stock at $80 and curious to see what will happen. I think the options market was implying like an 11% move on Supermicrocomputer and on Powell Industries. So big movers, the earnings will be out in less than 5 minutes. So, yeah, get ready. I'm either going to make or lose a lot of money on this one. So we'll look at like two more stocks here while we're in between this waiting for earnings. So why is Target up so much today? Let's see. Target, yeah, they're up 2.5% on the day. It might just be momentum. Maybe there was some certain news. I mean, we can go to the news tab. I'm not seeing any specific big news. But yeah, anyway, Target, I think, is a nice dividend play because check this out. If you look at the dividend, you get a 4.4% dividend yield with this company, and the payout ratio is only at 50%. Yo, it's Leo. Thanks again for the 3 roses, the 3 little dinosaur gifts there. I really appreciate that, man. Thank you, brother. And yeah, here's why I think Target's been hurt more than like a Walmart or a Costco, it's because they sell more discretionary items like household essentials, home furnishing, beauty products, apparel, like Nike shoes or something. Well, I don't think they sell Nike shoes there, but yeah. Anyway, they make $1 billion in net income a quarter, pretty much right at $1 billion of net income every quarter. And just for fun, we'll go see how much their dividend cost. The dividend cost, look at this. This is what I like looking at, showing you the numbers for yourself. Their dividend only costs $500 million a quarter. So yeah, they have right around a 50% dividend payout ratio. So the market just closed. Oh, I forgot to show my Robinhood portfolio. Let's see how this did on the day. We were down 1% on the day in here. What about the Roth? Bet this one was down worse. Yeah, down 4% on the day in the Roth. I just like being fully transparent. Every stock fell in my Roth IRA today. Um, uh, One of the companies reported earnings in there. But yeah, McDonald's is down 1.8. McDonald's reports earnings tomorrow. But anyway, yeah, there's my Robinhood portfolio. But let's get back to Webull because we're about to get earnings from AMD and Supermicro. Guess we'll see what happens. So, and Zeta. So ZETA also report earnings. Can you check Bitcoin? Do you own any mutual funds? I do not own any mutual funds, and I don't own Bitcoin either. But I can just look at the price of Bitcoin really quickly. We don't really like to cover crypto on here, but Bitcoin's at 113,000. I know MicroStrategy just bought like 4,000 Bitcoin at like 117,000. So anyway, yeah, someone said Google. Yeah, I do own Google as well. I love this one. Super innovative. You know, they own Android, YouTube, Google Cloud is growing. Took 1% market share from AWS. They own Waymo. They're in quantum chips. But anyway, yeah, I think it's 401 right now. I think AMD reports at 405. And Clear Secure did pretty good today. They were up 6%. They reported earnings this morning. And I think Super Microcomputer is also at 405. So we got to wait another 3 minutes for the earnings. And then I wonder what time Toast is. Toast is down 3%. I wonder how they're doing. So anyway, yeah, get ready. We'll see what reports earnings. I'm up 0.15% on the day. Hey, nice. I think, how did we do in this portfolio today? Here's my all-time return too. I just like being fully transparent. I feel like no one else shows this, but we're up 15% all-time in here. We got some winners in here and, of course, some big losers like UiPath, Zoom. But yeah, a couple minutes away from AMD earnings, Supermicro earnings, and Toast and Powell Industries. So I'm really excited to see what happens. Let me know if you own any of these ones. QQQ as well. Hey, actually, real quick, since we got 2 minutes till earnings, someone said QQQ. I always recommend, instead of buying QQQ, buy QQQM. It's the exact same ETF, exact same NASDAQ 100 strategy, exact same holdings, but with a lower expense ratio. They're genius. They don't market it because then they'd make less money. They market the QQQ ETF. DOCN closed up 29 here. Let me show you the watch list today. Just my all watch list of my 1,000 stocks in here. Here are the best performers from today. Lemonade Insurance, DigitalOcean. Nothing. Palantir was big today. But what was down on the day? Let's check here. Random companies you probably never heard of. GHM, I own this one. Only like $100 worth or like $200 worth of it. HIMS fell 12. That's not good. But anyway, let's see if AMD numbers are out yet. They're 2 minutes away from AMD, exactly 2 minutes away from AMD earnings. Sometimes they come out early. Let's see, did Toast report yet? Guess we're about to find out. Where's Toast? So Toast is dead. They were just up 3%, so it looks like Toast might be down, or no. Oh, they were down 3.35% on the day. They're up 1.5. So hey, maybe the Toast numbers are out, so we can read the comments here. But all right, let's see here. Oops. UAMY also reports earnings. Oh, hey, we can look at them as well. Do they? Let's see. Let me go back to the earnings side right here. Well, let me see how we closed on the day. This company reports earnings right here. That's another huge position for me. I got 12 shares, and then we're already up a crazy 200%. So I guess we'll see what happens with them. And here's my all-time return. We're up $6,600 all-time in here. Can you look at Duolingo? Yes, sir. We'll look at Duolingo. Remind me to look at that one. I love Duolingo stock. Get on IBIT. Yeah, that's the Bitcoin ETF. I like the Bitcoin ETF because it's SIPC insured. Wait, what was I about to look at over here? Oh, yeah, the earnings stuff. So again, AMD, Supermicro, and Toast. And that's pretty much it. That is big for the day. So the big dog is really AMD. Let's go look at it on the 1 minute chart. So yeah, we're 1 minute away, I believe, from AMD earnings. Someone in chat said, check out AMD. They are out. I don't think they are. Let me go to the 1 second chart. Usually the volume explodes the second that it comes out. So it doesn't look like the earnings are out yet, but we should see it either gap up or gap down like crazy any second. So yeah, we'll look at AMD and Supermicro, which should be out in less than 60 seconds. So let's see what happened. You own 1,000 stocks? No, man. I probably do own too many stocks to be honest with you. So, all right, we're waiting for AMD. And yeah, here's my position as well. Like, here's the thing with AMD. They've been doing great since the April bottom. I mean, even if they fell to like 167, I mean, it wouldn't be that big of a deal. And you didn't have to time the bottom too well to get a good price. I mean, I bought in, here's my cost basis, 125. We're still up 40%, even though we didn't really get close to timing the bottom there. Still make some good money. So maybe AMD comes out at 410. I don't know. Maybe the numbers are out. Let me go to the intelligent comments here. Earnings report missed. Looks like people are also waiting for the earnings as well. So let me go check out Supermicro. Let's see if they've moved at all. Uh-oh. Uh-oh. Supermicro, that's a nice candlestick there. Supermicro, it was just down 12, but it's only down 9% right now. So SAFA said, what do you think of Supermicro computer? The thing is, the most concerning thing about Supermicro, and this is why it's tough, is this margin collapse. So I'll be kind of quick about this. If you look at the revenue growth is great. You know, it's up 20% year over year, but the net income fell 72% year over year. The net income collapsed because they're giving customers more bulk deals. So they only had a 2% net margin. So we really want to see the margin kind of go back to this 10%, even though this is the server rack company. So anyway, guess we'll see what happens with them. Down 10% right now. RIP Supermicro computer. All right, let's see here. Is AM Dizzle out? They might actually report at 410. It's 406 right now, so we might have to wait another 4 minutes. Or does anyone know exactly what time AMD reports? Let's go check out Toast. Maybe they're out yet. Probably not, though. Toast, hey, that's some weird candlesticks. They probably did report earnings, but no one knows about this stock. So the volume is nothing. Like, see, so I guess I can turn on the average sticks, but yeah, the volume is just so low on this company because it's a small cap. Or what's the market cap on Toast? 27 billion. Okay. But hey, it looks like they're up 2.6% right now. We'll come back to see what the actual earnings are. SMCI might be a good buy. Yeah, hey, guess we'll find out. So Supermicro is now down 14%. Not good. That's a big candlestick dip. Let me go see if Powell Industries reported. So here's Powell. So yeah, hasn't moved yet, hasn't done anything after hours. This is another company that probably won't move much after hours because they're a $2 billion company. No one's really heard about them, but unlike a Supermicro, super high volatility, super high volume. So yeah, AMD's not out yet, so I guess we can chill out. Maybe we can look at a stock here in the meantime. I wanted to look at Duolingo, so let's go look at Duolingo. Here's what I love about this stock right here. You probably heard of this app before. It's like that language learning app, Duolingo. Here's why I think this one might be worth looking into. They've been on this massive downtrend, and they're such a high growthy company. So most of the revenue comes from their subscription business, and look at the growth here, specifically these year-over-year growth rates. This is the kind of stock you just want to buy and hold for the long run, and this is one I can trust because they're so growthy. And when they go up, they'll kind of deserve it. So insane subscription revenue growth. They're also a small advertising play. Ad business did grow 38% year over year, but hey, that's only like 8% of the business. But still, Duolingo I think is really cool, and not just revenue growth, but profits. 100 mil of free cash flow, 35 mil of net income. I think they're debt free as well, so I do like that one, and I don't own them. So yeah, AMD numbers still not out. Supermicro's, this is kind of the one day return. Supermicro's down 13. Is anything up right now? Here are my best performers today: YOU, PSIX. Toast is up 2.4. Wait, that means they're up 5% right now. Hey, look at that. Let's go Toast. What up? It's Leo. Yeah, Toast is out. It looks like, or it must be with this nice little uptrend right there. Do you think it'll go back up after earnings? Supermicro, I don't know about. And by the way, if y'all are enjoying the stream, don't forget to drop a like on the stream for me. It'd help me out. I sell nothing, no course book, literally nothing. Just on to give my opinion. So Toast is up 5% right now. Great news, but there's Supermicro down 12. Sprouts Farmers Market reported earnings like 2 days ago. They're down another 3. So yeah, now we're just waiting on AMD. That's the last, AMD and Powell Industries. That's the last 2 companies we're waiting on. Where's the AMD position? It's actually my largest holding in here. So kind of search this portfolio by my largest holding. AMD's the largest one. We're just waiting for them. I think AMD might come out in 1 minute. So we might get AMD earnings in 1 minute. I'm pretty sure. they report at 410, but there's a small chance they report at like 430, which wouldn't be great. I lost my Duolingo streak. My Duolingo position is now worth 10K. Really, Aaron, that's crazy. Nice. Super micro, like if it goes to 45, can it dip more? Probably can. I actually I don't know yet because I haven't looked at the numbers for myself. I want to see what happened. I'm guessing it was more margin collapse. Investors aren't happy for it to fall 10%. If we click on the news right here, yeah, numbers aren't on the news tab yet. But let me see. Is anyone gonna? Maybe someone reported the earnings in the comments. I don't know. Anyway, hey, this was nailed on. Hey, super micro options imply 11% move in the share price. And hey, they move 10%, move 11%. Not bad. Is this stocks and shit? Hey, I mainly just buy and hold shares for the long run. Yeah, AMD, it's 410 right now. I guess AMD might come out at 430. Here's my position in AMD, by the way. REMX saved my losses on SMCI. Did REMX report earnings? I don't know what that is. Let me check that out. Actually, this is gonna look weird for a second, so just hold on. Gotta put my phone sideways. Astera Labs, okay. Astera Labs is up crazy. Let's pull them up. The only way for me to check the after hours movement is for me to do that. So ALAB, this is another company I've actually been recommending because I love the growth here. Yeah, look at that after hours, up 11%. Nice little candle stick up there. So this is one I've kind of been recommending. New all-time high on Astera Labs, $22 billion company. Here's what I loved about them. They have a fortress of a balance sheet, no debt whatsoever, so debt-free company. And look at the growth of the revenue. Revenue's at a record up 144%, and they made net income in the two most recent quarters. So I'm curious, I bet you they continue that trend. They continued the growth, and they continued to make net income. So I bet that's why they're up so much. So yeah, super micro though, yikes, down 12. Let's see, is Toast up more? Toast is kind of struggling. They were just up more. Let me go back to the 1 minute chart on Toast. So, they just had a little red candle. So, I guess we'll wait for the Toast earnings to see what those are as well. Hey, what up, Spread the Wealth? How's it going, man? Hope y'all having a good Tuesday, by the way. Now we're just waiting on AMD earnings. That's so exciting, man. AMD earnings will probably move NVIDIA in a lot of the tech space because they're one of the bigger names out there. So, yeah, I think we have to wait, sadly, 10 more minutes for AMD earnings. I can go to the earnings whisperer and find out when exactly they release, but I'm pretty sure AMD, we got another 10 minutes, unfortunately. So we can look at some stocks in the meantime. So let's see. Oh, did Powell Industries report? Let's see. It says Powell Industries. I don't think they reported yet because they're only up 1%. Let me go to the full day. Or wait, that was what I wanted to see. So yeah, no volume on this company yet. This is another company that reports earnings. Can't wait. But let me analyze one company for you. And yeah, after this, in like 10 minutes, when all the numbers are out, we'll get back to the stock analysis. We'll look at some of your guys' stock. Yo, Julio, we just looked at DCTH a bit ago, but we'll check them out again. By the way, let me analyze this company for you because they were down 12% on the day. This was such a weird candle. Look at this. So they initially went up 63 to $63, and then they lost the whole rally, which is kind of weird. So let me actually go analyze this company for you. And let's go see what their earnings were because I haven't actually checked out what their earnings were. So yeah. Thank you when you come on. It's my first time. Hey, thanks for showing up here, Nardo. Yeah, if you want to hit the follow button, subscribe button, I try to go live every day, sometimes twice a day. We just look at stocks. I sell nothing either. I have no course, book, none of that. So anyway, here's HIMS. So here were the earnings this morning. So yeah, look, slight miss on revenue. They beat on net income, but missed on EBIT. So it was a mixed bag there. Ooh, the free cash flow went really negative. So they must have had a heavy CapEx number. Let's see here. Cash from investing activities. Well, not really. I guess the operating cash flow wasn't good. Look at this. So, they must have acquired a company. They must have did some sort of acquisition. I don't know exactly why this happened. So I'm pretty sure they acquired some company. But look at this net income. This is the great news. They're really profitable. I mean, they're gonna be making like $200 million of net income a year, and they're really growthy. I mean, look at this. They still kept the growth. 42% year-over-year revenue growth. Net income's up 200. What are their margins now? 7-8% net margins. Nice. So I still think that one is good, but they lost their partnership with Ozempic. They no longer sell that weight loss prescription. So that's one thing you do got to be aware. So yeah, AMD numbers still not out. Yikes. We're waiting for them. I do own AMD for y'all new folks in here. Here's my cost basis. So hey, if AMD goes up 20%, I won't sell a single share just because I'm trying to build up my position in them. But yeah, Toast is holding on to its gains, and Supermicro is still down 11%. Luckily, we got in at a really good time on Supermicro. So it was actually when they had their accounting fraud shenanigans. So check this out. If you notice right here, they reported earnings right here, and then there's no earnings for like 9 months until way over here again. So they were supposed to report earnings this day, and they didn't. And the market freaked out. The SEC investigated them, but then they found no accounting fraud, and then the stock finally went back up, got a $10 billion deal from Datavolt, kept on going up. So again, with some of these riskier kind of stocks, you don't want to have a huge position in them, even if you like do a bunch of research on them. Yo, Juanito, I didn't even see that. Thanks so much for the little rose there, man. I do appreciate that. I think I've been thinking about getting SMCI shares. They've been super strong. Yeah, hey, the momentum's been so strong on that company ever since the $10 billion Datavolt deal. It says AMD down too. Did AMD just report numbers? Let me go pull up. Let me pull up on them in the 1 minute. Oh, hey, numbers are out. Hold on. Look at this right here. The volume just exploded. So I think numbers just came out because that's a weird candle. So let's see what happens here. We'll chill on this for like another 30 seconds, and then we'll see what happens. And I do own this one. It looks like they're not moving much. Not let's go look at what the intelligent comments are saying. That 1 minute candle can't decide. Both sides are cooked. Yeah, man. Imagine AMD just stays flat. I mean, all the calls and the puts are burned. But I guess we'll really see what happens. A lot of investors like to wait for the earnings call. Sometimes they say something that'll move the stock. Happens constantly on Tesla. So anyway, yeah, let's go look at another stock in the meantime, another company that I love. And let's see, any update on Powell Industries? It says they're down 1.26%. Are the numbers out over here? Oh, the numbers are out on Powell Industries. I will look at this later, but I guess we'll wait to see how the market reacts. I guess not great right now because it's down 1.26%. But let's go check out Uber stock because this is a company that I love that I think you should probably just buy and hold for the long run. This is one I've actually been looking to buy into. So let's go check out Uber stock. So they just ordered $1.2 billion worth of cars from Lucid, and they can easily afford that because they print free cash flow. So check this out. If we go down here to the FCF number, which stands for free cash flow, they literally made $2.3 billion of free cash flow just this quarter. I mean, pretty ridiculous. And also the net income as well. The net income is super strong. AMD is out. Yeah, we'll go back to AMD and Supermicro in a second. Yeah, look at this. Uber is the most profitable they've ever been. They're going to be making over $1 billion a quarter from now on. I mean, it's ridiculous. So they're super profitable. And they're still growing, like their mobility revenue, the delivery revenue. How's the delivery revenue doing? Because, this is like Uber Eats. Uber Eats is up 18% year over year. So really good growth on Uber. So that's when I would consider, I actually would happily buy and hold them for the long run. Let me go back to AMD stock. Let's see. Hey, they're up 1.2%. Let's go. Let's go AMD. Let me show you my position. And then, of course, Supermicro. Our 10 shares are down 13% on the day, but let's go to the big gainers. How's Toast doing as well? Did Toast lose the lead? All right, Toast did fall a bit. That's not good. Let me pull up Toast real quick. Toast. This is another company you've probably never heard of. This is like a restaurant payment processor, point of sales company, high margin software company. They reported numbers. I do own this one as well. They weren't really doing. They're up a little bit. But AMD is flat again. I mean, AMD, where'd they just go? Did they go negative? Here we go. So let me pull it back up. This right here. That is Rumble. What the heck? It keeps moving. Let me just type it in. AMD stock. So yeah. Here's them on the 1 minute right here. And then we'll get after this. We'll go back and look at your guys' stocks. We'll see. We can do some more analysis on companies. Yeah, Arista Networks is up like crazy. Yeah, dang, red candle on on AMD. I guess we'll come back to them in a couple minutes and see how the market really reacts. Sometimes the market needs some time to really digest the earnings and see what happens there. But yeah, Supermicro was not great. Let's see. Have you tried Qual? I don't know what that is. But yeah. All right, I made money today. Hey, nice. Oh, yeah, so here's Arista Networks. Let me look at them as well. ANET, Arista Networks. This is another company that I really recommend. They're on my watch list, but it's kind of tough to buy them after earnings because I think they're up like 15%. So let's see here. Yeah, sorry, my Wi-Fi is a little slow today. Do apologize. But here's the 1-day chart. Yeah, look at them after hours, up 13.7% right now. I think this company deserves it. They're a growth beast. I mean, if we just go down here to the revenue's up 30% year over year. And if we go to the net income, it's up 27. I mean, they're making like 800 million net income a quarter on top of this really good balance sheet. So Arista Network's really interesting, up 13%. Powell Industries, did they just go negative? No. Powell Industries is down 2.64%. This is one I own. They're down 3% right now. I guess I'll look at the earnings later. That's a big beat on EPS actually. $4 of EPS. That's actually a big beat on net income. Then I wonder why the stock has fallen. Anyway, yo, what up, Jello? How's it going? All right, let's see. ETH review. You mean Ethereum? We don't really look at Ethereum, but there's not much we can really talk about on Ethereum. So yeah, AMD is now slightly down. We're down 0.58% on AMD, and Supermicro is now down 15. So yikes. All right, someone said thoughts on Berkshire Hathaway. So Berkshire Hathaway also just reported earnings really recently. So this is Warren Buffett's company, Berkshire Hathaway, and let's see how they did. So yeah, they've kind of been struggling. I mean, look at that downtrend. I mean, this is kind of like an S&P 500 alternative. Yo, what up, Chase? But yeah, they own Geico. So that's where this huge insurance business is. That's most of the revenue. It's actually from Geico, and they wholly own that. They own a lot of random stuff like BNSF Railroad. They own Dairy Queen, and all these. And they're very diversified. I mean, look at all these other industries they're in. I mean, they own a lot of stocks too, like Apple. So yeah, I wonder why the stock fell so much. Maybe it's just net income decline, but I don't know. They're interesting. Buying Zeta. Oh, yeah. Hey, Zeta reported earnings. Let me see how they did. ZETA Global looks like they're up 4% after hours. Very nice. Congrats if you own this one. This is one that I really like. I don't own them, but they've shown some really nice, free cash flow growth. I mean, look at these year-over-year growth rate numbers. Really nice free cash flow growth. They're getting net income positive. We're probably going to be this time next year. I mean, 45% less net income loss. They made net income last quarter. Really growthy. Revenues up 35. Really good balance sheet as well. They're deleveraging their balance sheet. This is what you love to see. The liabilities used to be 65% of the total assets. Now they're only 37% after growing the assets. So Zeta's a really cool one. All right. Yeah, dang, Powell Industries down 4% right now. I want to go to their website later and look at the actual earnings. So yeah, they own some car dealerships. What stock does? What up, Atomic Joe? I don't know what stock you were talking about. Let me go back to AMD real quick, just for a quick glance. Yeah, dang, Supermicro's down 17. Toast is down 10. Whoa, what just happened? Yo, RIP my Toast position. Let's go see what just happened right here. Dang, look at that. Sometimes like shenanigans like this happen. So let's see. EPS at 13 cents, beat 11 estimate. There must have been something investors didn't like here. So yikes, they're down 10.6% right now. So that's not good. Yo, drop a like on the stream for me. RIP. Yeah, here's Super Microcomputer. RIP this one too, down 17%. Look at that bleed. Keeps on bleeding lower. Yeah, IK said Super Micro tanking. Yikes. So good thing we bought them a long, long time ago. But buy the dip, yeah. So anyway, AMD, they're down 1.4 now. So just not great of a day. So all of the stocks that we were kind of looking forward to doing good didn't really do good. Powell Industries, this one actually looks like it did good, but the stock's down anyway. Hey, you sometimes like the stock's down today, like they don't really move much like now, but tomorrow morning when the market opens, AMD might go up a bunch. Who knows? We're also waiting on the earnings call. Investors like to hear what the investors like to ask questions and stuff. So yeah. Futu and Clear Secure were my only real winners. PSIX did pretty decent. SMCI is a scam. AMD missed on net income and EPS. Yeah. Actually, let me pull up the numbers right here. Actually, if we go to the news tab, it should show us. Oh, not yet. Should load soon, though. Yikes. Another candlestick down there. Not good. Hey, I just like being fully transparent, though. I feel like no one else really shows this. So, hey, if y'all wanted the follow button, tomorrow's going to be really fun as well. So, a lot of my earnings today reported earnings. Tomorrow, we get a lot of fun earnings as well. Probably from stocks that you probably aren't really interested in, but I own these because I am. So Novo Nordisk does, but Disney, I own Disney. I own McDonald's. Those are two ones I like. Uber reports earnings tomorrow. Shopify is huge. These are all huge names tomorrow. I love Shopify, AppLovin, DoorDash. Reuters reports earnings. I didn't even know they were publicly traded. That's interesting. Airbnb reports earnings. Fortinet, the cybersecurity. ET, MetLife, life insurance. We use them. So Honda Motor. So anyway, tomorrow we'll get a lot of fun earnings as well. So yikes, looks like AMD and Supermicro disappointed us on earnings. Yikes, Powell Industries now down 8%. I guess everything's disappointing us today. Oh man. All right, let's see here. AMD beat on revenue. Yeah, the sales beat. That's good. Can you buy and sell instantly? Yeah, you can. So let's see here. Let's go look at some more stocks here. Can you please check ZEPP? You know what? We'll look at ZEPP Health. So they're up 38% on the day. Hey, that's really good. So this is still only $300 million company, and that's just had a really nice uptrend. I mean, that's really good. Let's go see kind of more into the earnings here. So they sell AMAS Fit branded products. Well, there must have been some good news investors liked for the stock to really rally up that much. Someone looks like a momentum stock. I would be careful. Again, it's a really small market cap, but anyway. Dang, why all my stock got it? Dang, there goes AMD now. There goes AMD. And down 5% now. Look at that. All right. Let's see. What stock should I buy today? Hey, maybe buy the S&P 500. But it's kind of, you can't really buy anything today. You could, market's closed. You could buy after hours. SMCI calls tomorrow. I don't know, Jay. I'm just holding on to shares. You know what? I'm not selling any Supermicro. Probably won't be adding to my Supermicro. Same with AMD. I'm not selling AMD. I actually sold a share going into earnings, or like the little fractional share I had. Sold it at 172 and 176. And well, what's it at right now? It is at 167 right now. So I guess that little trim going into earnings was the right move. They did have some high expect. I mean, the stock has already. Hold on. Let me go back to AMD chart. AMD looks like if we go back to the daily chart here, the stock already, like this day right here, it looks like it reported earnings this day and just kept on running up. So it was tough for it to keep on going up. They also had a tailwind from being able to now ship their chips to China, which is good. TOST is having a slight bit recovery. Let me go back to the 1 minute chart here. Yeah, so it at one point was down 10%. Now it's only down 5%. So yikes. I don't even want to look at Powell Industries, man. Let's see. Let's go back to Powell. Yeah, down 9%, dude. Anywho. All right. QBTS, what up, Adrian? What up? Yeah, Qubits. Oh, here's the stock I bought today, by the way. I'll show you what I did buy today. I bought 1 share of Amazon today. Yeah, right here. That's a little buy thing right here. 1 share of Amazon. I also bought a share of Coca-Cola Consolidated. This stock right here, ticker symbol Coke. And let me go to the 5-day. I think we might have bought 2 shares. Yeah, look, we bought a share a few days ago and another one right here. Just dollar cost averaging into this position as well. Good thing we have a diversified portfolio, good thing I'm not all in on AMD or all in on Supermicro. Again, some of these are so risky companies, you can't have a huge position in them. Like I'm comfortable having just a couple $100 in Supermicro. So it's not the end of the world for me. Like, let's see, look, even after these huge losses today, the whole day's loss in this account is 1%. So we're only down 1%. So not the end of the world. That's why you got to be diversified. And again, none of this is financial advice. I'm not an expert. Always do your own research. Did I just disconnect the mic? Hopefully not. Okay, good. So someone said SoFi Technologies. Let me pull up SoFi too. They reported earnings a few days ago, and I'm actually surprised the stock isn't up more because SoFi had incredible earnings and incredible growth. Let me share with you this one. This one's kind of popular. It's a fintech, they have their own banking charter. They're so innovative. And I do own them, so I might be biased, but here's why I own them and why I'm not going to sell out of them. I actually regret every share I've ever sold of them. This is the real winner here on SoFi, and I just like showing you the numbers. It kind of explains why the stock's doing really good. And look at this. Their financial services revenue is up 101%. It's doubled. So incredible growth in the financial services. Lending's done really good as well from the student loan forgiveness redemption stuff. And also net income. They're super profitable. They made $100 million in net income just this quarter. So I think investors are starting to really take SoFi serious. They're growthy, really growthy. All right. Down or on sale? True. Thoughts on EXEL? Yo, Sully, I love EXEL stock. Everything's dumping on you. Yeah, spread the wealth. Everything's dipping on me, dude. All my good stocks. Oh well. I was really hoping Powell Industries would report some good numbers, but guess they didn't. We'll have to look at I'll look at their earnings later. But yeah, EXEL reported earnings a week ago, and they had a gap down on earnings, but I still think this one's worth looking into, and it might even be worth buying at $37. Again, not financial advice here, but this is one I really like in terms of financials. So if you go to the PE ratio right here, they're trading at an 18 PE. So that means they're trading at 18 times net income. They basically sell this main product. It's 91% of the revenue. It's just prescription, and it has some pretty good growth, up 19% year over year. They also get some licensing revenue. It's like high margin royalties, license out some of their formulas or whatever. And here's the net income. I mean, they're making nearly 200 million net income a quarter, very profitable. And the best part about EXEL is actually the buybacks. So look, net income's down 18, but for you as the shareholder, you are only down 15% because they bought back like 3-4% of all the shares. So EXEL, I like that one for the buybacks. Like the year before, they bought back 10% of all the shares in 1 year. You got an instant 10% return. You want 10% more. Crazy. So that's a cool one. But again, in a healthcare industry, you got to be careful. How will buy the dip opportunity? Hey, we'll check them out. I mean, at first glance, the earnings seem pretty all right, but I guess the stock is still down 7% right now. I'll look into them a little later. It looks like this is the best part. The EPS of $3.96. So remember, they just made $3.96. That's a record. Last quarter was $3.81. So it went from, I guess from $3.79 to $3.90. So anyway, a little bit of net income growth, maybe just slowing growth. So I guess that's one thing you gotta be careful with. Yo, EM, he said, what site is this? Hey, if you go to the link tree in my bio, I'm actually using a broker. It's a software right here. If you want to get it, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so it'd help out the channel. My favorite place to buy stocks. I also keep my cash in here. Earns a nice little daily interest in there. So yeah. Yeah, tomorrow's going to be really fun as well. We get Disney, and I own Disney as well. Novo Nordisk is tomorrow, McDonald's, and those are huge positions for me. Let me see. Is Supermicro still down? Dang, AMD's now down like 6.5. We'll come back to that in a minute here. But my second largest holding is actually Disney in here. So Disney reports tomorrow. We'll see what Disney does. They've really gotten their streaming service extremely profitable. Like they own ESPN, Hulu, and Disney Plus. Obviously, they just did a subscription hike at the very end of 2024. And it's just made them an immense amount of profit. Here, I'll show you this right here. This is why Disney had such a nice little recovery. It's the growth of the free cash flow. I mean, 6.75 billion, up 84% of free cash flow. It's a record. No quarter ever, like in history, was as good as the most recent quarter of Disney. Yeah, boring company Disney, operating profit up 84%. You don't see that much. I mean, cash flow per share up 87% thanks to the buybacks. I mean, incredible. Like they made $3.67 of free cash flow per share. Dividend only cost 50 cents. So anyway, a lot of room to raise the dividend. They just got really profitable, 3.4 billion in net income. So anywho, that's a bit of a more boring one. Probably won't outperform the market in the long run. But another company that reports is McDonald's. And I got 14 shares of this one, 4,200. So one of my biggest positions, like I think like 10% of my entire portfolio, or like 8%, is just in McDonald's. All right, let's see here. What did AMD miss on? I think they missed on net income, so margins, because the revenue grew, but the margins fell. I got to dig more research into it, but yeah, RIP AMD. ALA beat on earnings, still a buy. It might still be a buy. Got to look at what the earnings are. So yeah, and also TOST was another not great performer, down 6.6% right now. So all four companies that I own that reported earnings were all disappointing today. Powell Industries is down 7. Supermicro. Anyway, so can we look at Apple and HIMS, and let's look at AAPL. So Apple, this company right here is one I'd probably just buy and hold for the long run. It's like a forever owned stock. No reason to really sell out of Apple. I mean, half the revenue comes from their iPhone, then the services revenue. Whenever you buy something in the App Store, Apple takes a 30% fee on that. It's all high margin. It's nearly 100 billion of annual revenue for them, just ridiculous. Then they have like some of the other revenue. They are a bit affected by tariffs because only 36% of Apple's revenue comes from the US. then a huge chunk, 25% EU and all these other countries. So yeah, they make a boatload of money though. So yeah, did you cover AMD? Yeah, here I'll pull up AMD one last time. Yeah, they're down. We'll come back to these two, but yeah, Supermicro's down 16, AMD's down 6, Toast is down 7. So RIP my positions in this one. So luckily, even though all these are down a bunch, we're only down 1.5% on the day. We're still up 14% all time. And again, I just like being fully transparent. You got any questions for me? Let me know. If you want to see my year-to-date return, let's see. We're still up 26% year-to-date. We have some nice little dividends too. I think Disney just paid us a dividend. Yeah, look at that, $8 from Walt Disney and some of these other companies. But yeah. Anyway, let's see. SEZL. Yeah, dude, that's one of my favorite stocks out there. That's on my watch list. So this is a company with incredible margins. I recommend you guys put this stock on your watch list because this is the kind of company that impresses me. This is the kind of company I want to just buy and hold for the long run. Because check this out. You want to buy a growthy company that you can trust, and this is one that I think I could trust to just buy and hold forever. So first off, look at this net income. It's $36 million, up, crazy 350% year over year, but the revenue was $105 million. So the margins are incredible. This is a fintech, so literally 35% net margins. I mean, these margins are ridiculous. The margin growth is ridiculous, and I just love this company. They're deleveraging their balance sheet as well. Like the liabilities used to be 85% of the assets. Like look at that gap. Now the gap's widened. Great news. You own way more equity, 57%. So everything's headed in the right direction there. Incredible financials play. What app is this? Oh, hey, what up, Runman? Hey, there's actually a brokerage that I'm on. If you want to get this app I'm on, software, it's in the link tree in my bio, that first link there. It's an affiliate link too. So if you deposit $100, we'll both actually get some stocks for free. So anyway, I keep my cash in here too, earns interest. So anyway, do you hold for the long run or day trade? So this portfolio specifically, I just buy and hold for the long run. I call it the buy and hold portfolio. Once I buy a stock, I try not to ever sell it. Yeah, like Powell Industries, we bought this stock like years ago. Yeah, way back here, January 2024. But anyway, this one's down 9% right now. Yikes, not happy about that. Anyway, let's see here. Arista Network up 10%. Let's go see ANET. Oh yeah, we looked at this one. So yeah, check that out. This one's up 10%. Really good earnings. This company just prints money. If we go down here to the net income, I mean, look at this. They're making, and it just hits a new record. It went from 630 to 800 million net income. Really good balance sheet. So they're just another super growthy company making a lot of money. Let's see here. The Trade Desk, TTD. Yeah, here's an advertising stock. TTD. So if you're looking for, this is like a TV. Yeah, hey, EM, this is again, it's in the link tree there, the very first link there in the bio there, brother. It's a brokerage called Moomoo. Yeah. So anyway, here's the Trade Desk. They are down 2.3% on the day, but they've had a nice little rally since the bottom here. The reason the stock fell so much is on the news that they lost Netflix as a partner, and Amazon's highly competing with them with their new Roku partnership. But the Trade Desk lost Netflix as a partner because Netflix doesn't need the middleman anymore. They just find the advertisers themselves. But anyway, but still, the financial metrics are incredible over here. They don't really need Netflix. I think it was oversold for that reason. Look at this. So the revenue is up 25%, but net income's up 60%. I'm a sucker for a company growing their margins. Incredible margin growth here as well. I think they deserve to be doing a little better, but they have been doing pretty good. So anyway, I think they deserve this nice little rally that they've had. I do like them. That's an advertising play. DCTH, yeah, hey, Gulia, we'll check out DCTH. All right, so here's Delphcast Systems. This is one I do own in my Roth IRA, which our Roth IRA tanked today. Thanks to GHM, this stock's down 18% just today. But and DCTH is down 6 point whatever percent just today, 6.65% today. Again, this is such a risky company. You don't want to have a huge position in them. And I normally don't recommend these kind of companies. Like, look at the stock on the max. I mean, because of all the reverse splits, this was a half a $1 million stock per share at one point. So here's why I think right now, out of any time in history, it actually makes sense to buy this company. Call me crazy though. So first off, remember this, the whole company is worth $366 million. So the whole company is worth $366 million. No, this company has no debt whatsoever, no debt at all, and $58 million of cash. So literally 30% of the entire market cap is just their cash on hand. So first off, that takes a lot of risk off the table. A lot of their market cap is just cash, and they are super growthy in terms of their sales. So look at this. This is the highest revenue it's ever been. If we zoom out, you couldn't buy this stock a year ago because the revenue was nothing. You really couldn't tell. The revenue was 400,000 a quarter. You couldn't buy this company, but now it's 20 million. And at this growth rate, what's it going to be this time next year? And on this 20 million, they made $1 million of net income, and that was real as well. They're also making interest on their cash. So that's why I think, although they're a $380 million company, very small market cap, it might be worth looking into. And even though they're so risky, you got to have a super, super small position. Like I have $150 in them. Do I answer? Yeah, what's up, man? I already did. I answered your question earlier. Let's see. I've been checking TTD out for a while. What about Adobe? Yo, Nardo, let's check them out. ADBE, Adobe. So this company right here. Ooh, so what is this right here? So this app is telling me that there's a bearish continuation triangle. So that's some technical analysis. Let's go look at the actual financials though, because that's what matters in my opinion. Wow, look at this PE ratio of a 21 compared to the industry average of a 39. I mean, this is a dog cheap valuation. So I think it's because the thesis is being hurt here. So if you kind of think about this, will we need Photoshop and After Effects in 10 years? And that's kind of what the market's pricing. And I think they've oversold this one because for right now, the numbers are incredible. I mean, if you go to the net income, they're making 1.6 billion, 1.8 billion in net income a quarter. Free cash flow is even better, over 2 billion of free cash flow a quarter. And this is also a super shareholder-friendly company. They've bought back like 6% of the company. So look, the net income's up 7.5, but your return as a shareholder, because it's earnings per share, EPS. So although the net income only grew 7.5, come on, Wi-Fi. Okay, the net income, your return is actually up 13% year over year. So very nice. Is this pre-recorded? Nah, Alex. I guess you can kind of see the time in the top right there, but nah. What happened? Yeah, hey, Ron, or Luis. Yeah, if you want to get this, it's actually a broker that I'm on right here. If you want to get it, this kind of app I'm using, the software, it's in the link tree in my bio. It's the very first link there. It's free. And there's also an affiliate link. So if you go and deposit $100, this is where I like to buy stocks, lowest fee broker, free. We'll both actually get some free stocks if you deposit $100. So hey, I DWLD Illustrator the other day for free. Oh, I downloaded. Oh, we won't tell anyone. Yo, actually, don't tell anyone either. The Photoshop I have is actually the hacked version. I done pirated that. So sorry, Adobe shareholder. All right, so let's see here. Oh yeah, hey EM, it's the very first link there. It's a broker called Moomoo. So can you look at BU? Yo, what up? What up, Rodriguez? I don't know what that is. So let's see. Is Astera Labs still a buy after today? Yo, what up, Jace? I need to look in depth into the earnings. Yo, what up, Gabe? Hope you're doing well. Happy Tuesday. Oh, and let me go check out AMD. We'll go check out how AMD's doing. My portfolio crashed today thanks to Supermicro and AMD. Let me actually just show you that real quick. So we're down 16% on the day from Supermicro. AMD fell nearly 6%. TOST, the payment processor for restaurants, is down 6%. So yikes. Luckily on the day, we're only down 1.43% in this portfolio. But another company that reported earnings, which I wish I owned, but I don't, is Astera Labs, up 9% right now. This company, very strong fundamentals. Doesn't NVIDIA CEO buy RXRX? Yeah, he does. Here, I'll show you that after this. And I wouldn't actually buy RXRX. Yeah, hey, sorry, deal. If you want to, I should have this pinned in the chat. I always need to do this. Like, sorry, last time. You want to get this little broker, this app I'm using? It's in the link tree in my bio, the very first link there. Dang, man, my Wi-Fi is terrible. Why do you have a Robinhood and Moomoo account? And a Webull account? It's actually because there's no burden, and having multiple brokerages. Oh, my phone disconnected, bro. I am not even paying attention, guys. That is my fault. Let me go and screencast my phone again. Dang it. There we go. Sorry. Astera Labs, they're up 9% after hours. They just are so great. I mean, they have no debt at all. No debt. So much cash. The cash grows. The assets grow every quarter. They're net income positive, making net income the past 2 quarters, and super growthy. So up 144%. I would not be surprised to see the stock just continue to win, even though they're up 10%. I do want to see the most recent earnings. Grab a charger while you're at it. Yeah. SMCI killed me. Yo, Jamal, I feel you on that one, man. SMCI tanked me. I'm down $100 thanks to SMCI. And they're down 16%. Luckily, I don't have too much, only 10 shares. But AMD's down 5%, and they've lost me over 100 because I have way more in AMD over Supermicro. So, yeah, RIP. Let's see. I got rid of Open Door when I saw earnings coming. Yo, deal. That's a great move there because I would not want to buy Open Door because they're at they have bankruptcy risk in my opinion. Let me go back to Powell Industries. Yeah, Powell Industries down 8.5. Yikes. They missed on revenue. Yo, ADYM said Palantir stock. Yeah, Palantir reported earnings this morning. They actually had some very good earnings, like uh bro, who is texting me? Someone's texting me and I have it on my other phone next to me. Um oh, okay. Palantir, this stock's at an all-time high today. The earnings beat my expectations, but I still think the valuation is pretty ridiculous. They're trading at 118 times sales, not net income, but sales. Pretty ridiculous valuation. But look at this. Here's the good news. Here's why they probably deserve the high valuation. It's because of this government revenue growth. So much of the government uses their software, like police stations. A bunch of them use Palantir. And look at the growth here. It literally grew 49% to a new record. And not just the government revenue, but the commercial revenue as well. The highest growth rate it's ever seen, up 46%. They've never seen that growth rate in years. So the growth has just exploded the most recent quarter. Great news. And the profits as well. The actual net income that they made. So yeah, I will buy more Palantir. I'd be careful with this valuation because the valuation does seem a little high. But again, great net income this quarter, 330 mil of net income, and again, fortress of a balance sheet on Palantir. I mean, they have no debt at all, and the cash went from $4 billion last year to $6 billion of cash on hand. So yeah, Palantir is a beast. Congrats if you own this one. I've always wanted to get into that stock, but can never find an actual reasonable valuation. And apparently, it just keeps on going up. Sniper said, what broker is this? Yeah, hey, if you want to get this broker, it should be in the link in the description if you scroll down. But if you go to the link tree in my bio right there, it's the first link there if you want to get this broker I'm on. Yo, Chiro, what's up, man? Hope you're doing good. Is it necessary to open a live account or can I use? Yeah, you can paper trade on there. Yeah, heck yeah. Here, I have a paper trade account. You kind of have a portfolio here, and here's my. If y'all want to follow me, Nathan Robert. I have a paper folio, and you can have like a fake portfolio, which is kind of cool. Yeah, dude, we bought Powell. We had a great. Anyway, let's keep going here. I was gonna buy Palantir at 80, but people said it was too expensive. Yeah, that's the thing. Palantir's always been crazy expensive, and it just continues to keep on going up. What about AMD? Yeah, let's go quickly glance at them. Yep, down 5.2. Let me go look at them on kind of the candlestick. So yeah, here's how AMD is reacting. Actually, not too bad. Only down 3.9% right now. We'll kind of wait for the earnings call to see if they kind of react more. Supermicro is the big loser here, down 15. Yikes. I guess we'll see what happens by tomorrow morning. Yeah, hey, thanks, Chiro. It'll drop like a rock. Because of business and the valuation, yeah. Let's see here. Look at NAT stock. Let's check it out. NAT stock. And by the way, if y'all want to support me, the only way to support me is subscribe to my YouTube channel. I sell nothing, by the way. I don't have a course, a book. I sell nothing. Only thing I do have is a YouTube channel. So best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. I'm also streaming on there. So if you missed anything and want to replay anything, you can replay it on the YouTube. I'm also streaming on YouTube right now. The main best way to support me, just watch the stream from YouTube instead of TikTok, because TikTok keeps taking down my lives and messing up my account. Yo, Poetic Thor, thanks for the rose, man. But anyway, NAT stock, I'm not seeing anything that's really blowing me away here. Sales were down 37%. They only made $4 million of net income. So, not great. And they have this crazy dividend. I don't even know if they can afford it. Yeah, 11% yield. That's probably why people like it. But the revenue just tanked on this company. So that's what I'd be careful with. Revenue fell 37%, and the net income was only $4 million. It was only $1 million last quarter. They can't really pay out a dividend. So, yeah. All right. Amazon. Someone said, yo, what up, Yusuf? So I actually bought a share of Amazon today. The valuation seemed too cheap to pass. Well, not super cheap, but I decided to pick up one more share of Amazon today. I'm never going to sell it. This is a position I just want to buy and hold for the long run anyway. And in 5 years from now, it wouldn't really matter if I bought it at 213 or maybe if it goes to 200 or 200. It doesn't matter. Anyway, let's see what happens. Yeah, hey, sorry, Official Cody. If you want to get this little broker, this app I'm using, it's in the link tree in my bio. That first link there, it's a software brokerage. Anyway, let's see here. I wouldn't sell SMCI at this point. Yeah, I'm just holding on to my shares. I'm also not going to buy any more SMCI shares. Sell AMD before earnings. Let's see here. Can't tell if LYB has a sustainable dividend. You know what? Let's do the analysis. Someone's wondering, hey, does this company have a sustainable dividend? Well, I'll give you my opinion on it. Here's how I would analyze them. So, yeah, so first off, the yield is pretty high at 10% dividend, but let's go compare how much they make and see exactly how much their dividend costs. So, this is an oil and gas company. So, here's the bad news. Then all right, so they're pretty much these declines are bad. They used to make 500 mil to a bill a quarter. It was only 300 million in the most recent quarter. So kind of remember that number. They made 317 million in the most recent quarter. Let's see. And the dividend cost 400 million a quarter. So this is the thing you want to see. You want to make sure that at least they're making 445 million a quarter to see that they can afford the dividend. So this actually is really bad. They actually can't afford the dividend the past, 4 quarters. So no way, Mouse, for the flying octopus in the hearts. No way, Mouse. I really appreciate all the gifts there. Thank you so much. If you got another stock you want me to look at, let me know. I got you. Thank you so much, Mouse. I really appreciate that. Does anyone else like cow drink? I haven't heard of that drink before. So Ray said, have you ever heard of NXT? Is that Next Tracker? I haven't heard of this one actually. Let's go check him out there. And hey, Andre, no way for the 20 roses. No, and hey, Leslie, this is the best compliment. Someone in the YouTube chat said they just came from the TikTok stream. Thank you so much. I'm trying to build up my YouTube channel followers on there. So if you want to help me out, go watch the stream from YouTube. Anyway, so here's Next Tracker right here, NXT. Let's go analyze this company. I haven't heard of this one before. Let's go look at the revenue. So the revenue's up 20% year over year. That's good. After being up 50% from the previous year. So it kept on to that growth. Really nice. And they're net income positive. So this company's making 150 million plus a net income a quarter. No dividend on this company, so they don't pay a dividend. And this PE is a 15. So the industry average is a 16. So they're right in line with the industry average there. I wonder what they do. So, here we are. I didn't see this one. Someone said AXON. I think this is like Axon Software. This is a great company, in my opinion. I mentioned SYM when it was at 14. Yeah, well, look at Symbiotic. That's one of my favorite robotics plays out there. So, wow, look at Axon Enterprise. This stock is at an all-time high, up 16% just today. And let's go look at the financials because usually the financials explain why the stock is doing really good or really bad. So they just reported earnings. This is a good beat on revenue, nice beat on revenue, huge beat on net income. They were literally expected to lose net income, but they made net income. And they were great earnings from this company. So yeah, that's the good news here. Oh, no way, Nikita. Thanks so much for the 20 roses there. Thank you so much. Hey, if you got a stock you want me to look at too, let me know. I'll check it out for you. So here's one of my favorite, hey, Equinox. Thank you so much, brother. I really appreciate you. And you too, Seerith. I wish I could subscribe to you guys back. Thank you so much for coming to the YouTube stream. So anyway, check out, SYM. This is Symbiotic. This is a really cool company. So SYM, this is a warehouse robotics company that Walmart is like one of the largest shareholders of this company. So yeah, wow, they're up 11% on the day. Probably my second favorite robotics company. If we go to the shareholders right here, Walmart owns 13.75% of the company. That's because that's their main customer. Symbiotic's main customer is Walmart, helping them with their warehouse logistics using robotics. Anyway, out of all the robotic stocks, you want to buy one with real growth, real IP, real patents, and this one checks all those boxes in my opinion. The revenue growth is ridiculous, up 39% year over year, and they're super close to net income positivity as well. So they're not making net income yet, but they're barely losing any money. I mean, they lost 60% less net income than the previous year. Great news. They made net income this quarter. So probably this time next year, they're going to be making net income every quarter. Free cash flow just blew up as well, up to $250 million. So Symbiotic, this is a warehouse robotics company. And that's a pure play robotics company. My favorite robotics company is going to be Amazon because they have unbelievable robots in their warehouses, but this one's not exactly a pure robotics play. They have the AWS, the online stores, e-commerce, all that. So yeah, that one, great pick there, Milton. You must be up a bunch. AMD, Vin says I'm cooked on AMD. Me too, man. Let's see. Hey, it's actually Supermicro's now down worse, but Supermicro's down 15, AMD's down 5, TOST is down 5. Dang, Reddit's down 2. Actually, Reddit had really good earnings, man. Does anyone on Reddit? I mean, this has been an incredible performer on earnings. Anyway, let's go back to the analysis right here. So yeah, Someone said, did you check COMM? So someone said COMM stock. So this company right here, APH Amphenol Group, is actually acquiring COMM. COMM stock, and that stock went up like 80% or something. Let's see, COMM. It doesn't want to pull up the ticker symbol, but I'll find it for you. How about TT? Hey, we'll check that one out. So yeah, here's CommScope right here. Yeah, wow, look at them. They were up 80% yesterday. Went from 7 to 14. So they basically doubled on that news. Or basically, Amphenol is buying like the thing that's most of their business, and they needed to do that because they were heavily indebted. They could never pay off the debt. So it was genius for Amphenol to acquire them. Let's see here. Thanks again for the roses. Let's see this one. TTNDY. Hopefully we can find this one. We can. Okay. So this is Tektronic Industries. So this is not a US company. This is an ADR. So this might be a Chinese company. Let's see what country they're in. So most of their sales come from North America, though they're not headquartered in North America. Let's see where they're headquartered. They're actually headquartered in China. So that's one thing you do got to be careful of, that they are HQ'd in China, but most of their sales come from North America. They sell power equipment, floor care, and cleaning. Let's see, are they profitable? Yeah, man, look at that. For the first half of 2025, these Chinese companies kind of report weird, so it's for the first half of the fiscal year 2025. They made $600 million so far, so that's extremely profitable, and that's in US dollars as well. And you get a nice little yield here, a 2.2% dividend. They're the parent company for Milwaukee Tool. Wait, they own Ryobi? Oh my goodness, Ryobi? I'm going to add that to my watch list. There's like this ginormous Ryobi factory. Like, they must, like, Ryobi's like manufacturing site must be it because it's huge. Right next to my house. I started leaning into DOW yesterday. Thoughts on them? So I do think this one's a bit of a dividend trap, and I think that their dividend is at risk of being cut right here. So also this stock is kind of at all-time lows. Here's the bad part. So if you look at this yield right here, they have a 12.5% dividend yield. So an insanely high dividend yield. You're supposed to get like 8% of your money back a year from the S&P 500. Well, this is basically saying you'll get more than that just in dividends a year. So here's why I think it's unsustainable. If you go to the net income right here, dang. And so it used to be sustainable because look at this. Wow, what is it really? Used to be over $1 billion. So look in 2021, they were making $1.7 billion a quarter of net income. This is bad news. They lost $800 million this quarter. So when you're not making net income, you can't afford the dividend. But let's say they make 400 million, or I don't know. Hopefully they go back to 400 million of net income a quarter. Let's see how much the dividend cost. The dividend cost 500 million a quarter, or 496 million. So they at least need to make 500 million in net income a quarter. To be honest with you, I don't have much trust in this company. So I do think that this one might be at risk, or is at high risk of a dividend cut if they keep up these huge net income losses. That's not sustainable. Negative 800 mil, negative 300 mil. So gotta be careful with that. Let's see. What is Ryobi? Yeah, they just make like tools and stuff like that. Already been cut just recently. What up, Jonathan? And what up, Tom? Oh, Figma stock. Is that ticker symbol FIG? Yeah, if you guys got any stocks you want me to look at, give me the ticker symbol and I'll check them out for you. We'll look at kind of a couple more stocks here. Did Figma just IPO? Oh, yeah, Figma just IPO'd. So this is like, well, wow, they've had a rough couple of days here. They went from 130, now they're at $80. So again, we don't have much history behind this company because they literally just IPO'd. So if we kind of look at their financials, there's not much. Hey, Jesse Collins, what's up, man? Yo, Andre, we'll look at NEGG too after this. So yeah, this is kind of the good news, the little numbers that we do have. We can see that the revenue grew 50% year over year. And on that, they made 50 million in net income. So they're making net income every quarter. Pretty good. Oh, here we go. Let's see. Sorry, Hiru. Let's see. He said TTMI. You know what? We'll check this one out. We'll check out TTMI. Then we'll go to NEGG. So that's new egg stock. So TTM Technologies. Hey, this one's on my watch list. So there must be something I really like about this company. Wow, this stock is at an all-time high, or pretty close to it. I mean, just really monster performance these past couple months here, really the past 3 months. Let's go see what they do. So printed circuit boards. So that's what 99% of the revenue is, printed circuit boards. Let's see how this is doing. So revenue is up 20% year over year, so pretty good growth. and net income's up 50%. So that means they're growing their net margins. Great news. So, hey, I can see why this one's doing pretty good. And yo, no way. Sarith, it's Mouse from TikTok. Thanks for the analysis. You're the honest person. Hey, thank you so much, Mouse. I really appreciate you always leaving me donations. I really appreciate you. Thank you so much. Again, if you got any other stocks you want to look at, let me know, Mouse. I got you. For the thank you so much. Mouse left me a $5 super chat on the YouTube stream. By the way, y'all want to support me, go to the YouTube stream. I'm trying to build up my YouTube audience. So in a YouTube channel is called Nathan Robert. If you just type that into YouTube, it's also in the link tree in my bio. But anyway, here's Newegg. This is kind of like an Amazon competitor, but they're such a small company, a $1.1 billion company. But they've seen a nice little recovery recently. Let's go see what they do. So yeah, components and storage, computer systems. Are they making money? So the revenue's down 5%. They kind of lost their growth. So revenue is down, but oh wait, is this from 2023? So we actually don't have the 2024 numbers. So they haven't reported any numbers, huh? I don't know, man. I'd be careful with that one. Looks like a momentum kind of stock right here. So yeah, hey, yeah. Thanks, Jelly. Yeah, W Mouse. Nice. What app is this? Yeah, Hiru. This is a broker right here. If you want to get this software I'm using, it's in that link tree in my bio. That very first link there. It's an affiliate link too. So if you deposit $100, we'll both get some free stocks. It's my favorite app for analysis. Favorite brokerage, lowest fee. So let's see. OKLO. Let's check this one out. So Oklo, this is your nuclear startup right here. The nuclear stocks have been such on fire ever since that executive order, really benefiting nuclear sites, nuclear reactors. But this is the thing. First off, this has been a great performer. It's at a literal all-time high today. So if you've owned the stock before today, you've done amazing. But I wouldn't really look into buying this one compared to all the other nuclear stocks out there, because again, this is a startup right here. So if you go to the revenue, it says no data because they've never sold anything before. Never sold a product or service because they're a startup. And they're barely losing any money. There's no bankruptcy risk here. Tons of cash and no debt, but I want to see them finally start to make some revenue. And I actually own CEG. I own another nuclear stock that actually owns like half of the US nuclear reactor fleet. So what is Zeta? So yeah, we can check that one out too. Yeah, they got no revenue right now. I like CEG though. Let's see. Yeah, hey Prosper again. Prosper. I think on the YouTube stream there should be a link in the description. If you scroll down in the description, you can see it. It's that first link there. But if you go to the link tree in my bio, first link there. If you want to get this broker I'm on, it's called Moomoo. But here's Zeta Global. Wow, look at that. They're up 8% after hours. So congrats if you own this company. I'm not actually sure what they do. You know, this isn't Meta, but this is Zeta. So anyway, I like the growth on this company. Well, you know what? Let's go see what they do real quick. You know what? I'll read this. Why not? Marketing technology software company. Automation software. So, hey, that sounds like a hot industry right now. But yeah, I love this one for the growth. I mean, obviously, they just reported new numbers. So they just approved a $200 million buyback program over 2 years. So they're buying back 100 mil of stock a year. That's great news. They rose their guidance. Let's see. Rose the guidance. So anyway, the numbers must have been good for investors to send the stock up 8% after hours. They're starting to get net income positive as well. What is it? AMD data center sales drive record results. Can the margin maintain? It looks like the margins did not continue on AMD, unfortunately. But yeah, anyway, net income's getting better. I'll turn on notifications list to you regularly. Hey, thanks, Leslie, so much. Yeah, if you want to hit the follow button, subscribe button. I try to go live every single day. We just look at stocks and stuff. I sell nothing. I don't have a course, a book, a Discord, just on here giving my opinion. So again, none of this is financial advice. Always do your own research. One thing I always recommend, like if you find a stock you really want to buy and get exposure to, I recommend you DCA, dollar cost average into the stock. But that doesn't always save you. Like if you go to this stock right here, like even though I slowly bought into the company, dollar cost average into it, you can still lose a lot of money. So always do your own research. And here, by the way, I like being fully transparent. Let's go see the super microcomputer losses again from today. And hey, tomorrow's going to be really fun because tomorrow we get McDonald's, Disney earnings. So yeah, look at this. Super Micro's down 14, AMD's down 5, and it says T-Mobile's down 3.5. I'm guessing this is a fake, like one share. No, something just happened. Let's go check out the news here. I don't know what actually just happened. Acquire. I don't know. I'll dig into that later. Don't know what just happened, but it just went below my cost basis. That's not great. I might actually go and look into buying more of them. So, anywho, let's see. Let's look at the number. Yo, Michael, which stock you want me to look at? Let me know. So let's see here. I've never heard of this stock. I wonder if it's a small cap. VERB stock. Verb. Let's check it out. Verb Technology. Well, so yeah, we don't actually cover these kind of stocks on the channel here because if you look in the top right, it's a $26 million company. So the whole entire company is worth 26 million. It's just so I thought this said GoFundMe, but it's Go Fund Yourself. I wonder if that's some kind of GoFundMe competitor or something. Hey, it's showing some growth. I mean, look at that. I mean, 700,000 of revenue, $20 million company. Again, I'd be careful with this one. I mean, this does seem nice growth here, but anything could happen. They're such a small company. Although they do seem kind of interesting. They're barely losing any money. They'll probably stay afloat. Ooh, someone said Wingstop. Hey, I do really like this one. They collect a lot of high margin royalties. Did y'all know Wingstop is a royalty business? I think 40% of their total revenue is royalties. The people using the Wingstop name, a certain percentage of the sales go back to the parent company as a royalty. So Wingstop's pretty cool. They're just like McDonald's. They copied McDonald's franchise, which is genius. And that's why Wendy's is struggling because they didn't do that. So Wendy's is at like all-time low right now. Let me show you Wendy's stock after this. It's crazy. But anyway, the net income's pretty strong on this company. They had a little one-time adjustment last quarter. Like it spread out these two, so it made this one go up and this one go down. Basically, you look at the operating profit. They're making like 40 million a quarter. Pretty nice. Revenue's up double digits. That's good. They pay a little dividend too, but they sometimes do these special dividends. Let me see. I don't think they're doing them anymore because they're doing buybacks. Yeah, like they did a $4 special dividend right here. That was a while back though. But anyway, Wingstop's a cool restaurant. And let me look at Wendy's real quick. This, I feel bad if you own Wendy's. I don't think anyone here does. Look at that downtrend. I mean, the stock was literally a year ago, $20. Now it's $9. So Wendy's has lost half its value. I mean, look at that, man. RIP Wendy's. Let's see what the yield is. 10% dividend yield. Oh, anyway. Ooh, do you like Coca-Cola for the dividends? I do like Coca-Cola. You know, that's kind of a Warren Buffett approved stock there. You know, if we go to Buffett's portfolio, his fourth largest holding, 10% of his portfolio is just in Coca-Cola. So yeah, this one's done great. I mean, the stocks should return like 6%, 7% a year. And half of that comes from dividends. You know, you get a near 3% dividend yield. I actually own the Coca-Cola bottling company, which has a way lower dividend yield, but I think it's going to be more growthy. So check this out. I own 23 shares of Coke Consolidated, ticker symbol Coke, not ticker symbol KO, like the other ticker symbol. And this is the bottling company, and they have a much lower dividend. Like, look at this, a 0.71% dividend yield. But look, this is a very low payout ratio, only a 5% payout ratio. That's what I love about Coca-Cola Consolidated. This, again, I bought a share today of that company, so I might be biased. All right, let's see. Robinhood stock. Hey, yeah. I bought Netflix today. First Solar. Yo, we'll look at First Solar, Arista Networks. I'll get to all these. Yeah, but I want to look at Robinhood first. This has actually been one of my best performing stocks of all. It is actually my best performing stock of all time, and they deserve it. I mean, this is why Robinhood is a beast. I mean, first off, super growthy. Revenue's up 45% year over year. And on this $990 million of revenue, $390 million of that was net income. Robinhood has insane margins, 40% net margin. The margin grew 40%. Incredible earnings from Robinhood. People are really starting to take them serious. And yeah, I'm up like 600% on them. Crazy. I wish I bought it too. Yo, Todd, what's up, dude? Hope we're doing well on this Tuesday. So let's see here. First Solar. Yeah, we'll look at First Solar. Then we'll go to Netflix. NVO, that's that Ozempic company. So here's First Solar. Out of all the solar stocks, this one is probably my favorite pick. They're doing a little bit better than Enphase Energy, but I like this one so much because of the net income right here. The Inflation Reduction Act had incentives for solar. Those solar incentives just got taken away, so the net income's struggling a little bit. But still, they're making a couple $100 million in net income every quarter. Revenue's still up. I mean, the margins did fall a bit, but still, that's because of the takeaway of the stimulus there. Let's look at Netflix here. So yeah, that's probably my favorite solar play. I would, if I wanted exposure to solar, I'd probably just buy and hold that one. But honestly, I'm liking nuclear as a better industry right now. than solar. But here's Netflix right here. So Netflix, this is such a great company, man, but the valuation's always been too high on them for me to buy. Let's see what the valuation is. So the PE is a 48. So, but I mean, that is historical average. The historical average is a 48. So they're trading at their historical average PE. This is what's crazy. I mean, we go to their premium subscribers. This company's premium subscribers went from 260 million to 301 million. So they have crazy subscription numbers, 300 mil. And look at this. Their average monthly revenue per paying membership is $11.69. And basically the best part about them is the net income. The net income grew 45%. That impressed me actually to 3.13 billion. Incredible. Sales are up 15, net income's up 45, more margin growth. Margin's up 25%. So I can see why that one has a high valuation. I mean, they probably deserve it, but they're starting to fall a little bit. Might be a time to look into them. So NVO, yeah, what up, Josh? He said NVO is at a great price if you're looking to add. So if you buy the stock now, you're basically betting into earnings because tomorrow this stock reports earnings and they're basically either going to go up or down a bunch. If you're wondering what is this company right here, you've probably heard of them before. It's that weight loss company that owns Ozempic. So it's a pure, basically weight loss play. 95% of the revenue comes to their obesity care products. So, and if we look at the net income, they just had an incredible quarter, but their patent for Ozempic expires in 2027. I think it's being overly priced in right now, but look at this net income, 4.2 billion just this quarter. That's really good. Near 3.5% yield. They raise their dividend every year. Look at the valuation collapse. So the PE is collapsing because the future growth is uncertain about the patent and stuff. So that's why this PE is starting to decline versus the industry average of 23. So I do think that one's worth a nibble. But again, it's tough buying that right now because they report earnings tomorrow morning. So, or maybe tomorrow afternoon. I don't know. Powell Industries still down 7.7%. Did FIX just fall? Oh, no, they didn't. Anyway, let's keep going here. Let's see. He makes more, the CEO and KO. Let's see. LAC stock. I think that's Lithium America. There's one thing I found really intriguing about this stock. Someone asked me about this stock. This stock just follows the price of lithium, the commodity of lithium. And lithium, the commodity of it, if you look, it's at like all-time lows. It pretty much just looks like this stock. But there's one reason why I'm actually looking into this company right now. So this whole company, the whole market cap, you could buy in at this valuation. I don't know if you could buy the whole company for this valuation, but theoretically you could because you're buying it at this valuation. But the whole company is worth $575 million. And if we go to the balance sheet right here, they literally have no debt and $446 million of cash. So literally 80% of the market cap is just their cash on hand. So that's the one thing that's really interesting about the stock. But there's what? No. Okay. Okay. I don't know what that was, but you still got to be careful because this is a startup company. If we go to the revenue right here, it says no data because they've never sold anything before. It's a startup, or I don't know. They just haven't opened their lithium mine or whatever. I don't know. So it's a bit of a mixed bag there. So I like them because 80% of the market cap is just cash on hand. So it's interesting. Yeah, you're right, Michael. LAC making no money. Powell is down badly. Yeah, Ion, thanks for telling me, man. Yeah, Powell Industries down 7.7%. Not too terrible, but I got to look at their earnings later because they beat on net income, but they missed on sales. But that margin growth on them has been impressive. Oh, yeah, Arista Networks. Yeah, thanks, Thermo. My bad for not getting to this one. ANET. So this is Arista Networks. They're up, wow, 14% now. So they reported earnings today. Obviously, incredible jump there. And we could kind of see this coming, I feel like, because this has been such a growthy company. I mean, their product revenue, I mean, if we just zoom out, I mean, it just hits a record every single quarter. And look at these year-over-year growth rates. The growth rate's growing again, up 27% year-over-year. But not just revenue, but profits, after-tax net income, 800 million just this quarter. And they just reported earnings today. We don't have the earnings that just came out an hour ago, but you can probably tell they just continued to keep up this growth. So anyway, incredible profits. And let me look at the balance sheet too. Yeah, look at this balance sheet. Monster of a balance sheet. So yeah, Arista Networks, congrats if you own that one. Ooh, what up? Ethan said AVGO, Broadcom. This is another company that just deserves to be at all-time highs. They have incredible fundamentals. So a lot of people know Broadcom for their semiconductor solutions, but the hidden gem in the growth gem has actually been in their infrastructure software. And this growth, I mean, it used to be just, 1.9 billion a quarter. And then they acquired this one company. It jumped up a bunch, and now it's 6 billion a quarter. I mean, these year-over-year growth rates were incredible right here. So the infrastructure software has been growing like crazy, and it's done wonders for their free cash flow. I mean, the free cash flow was 6.4 billion just this quarter, up 44%. Now, a lot of people like to look at the net income too. Net income was 5 billion. They had a little one-time adjustment this quarter from the acquisition. How I can tell, because you go to operating profit, there was no negative loss there. So anyway, incredible numbers on Broadcom. I wish I owned this one. Even if you buy this one, you get like a 0.8% dividend yield. So anyway. Yeah, Josh, DOW, I'd be careful with Dow Chemical. The dividend, I believe, is going to have to get cut or something. They can't afford it. Ooh, can we hear about TSM? So you know what? We just looked at them. We'll look at Taiwan Semi as well. I'm actually shocked. I'm actually looking to buy this company. I don't know how Taiwan Semi isn't up more. They had incredible earnings, like incredible earnings. And I'll show you this. First off, the valuation is a 25. So they're trading at a 25 PE, 25 times net income. Like they have the ability to stretch up to like a 27, a 28 PE before they really get overvalued again. And I think that's going to happen. And they deserve a high valuation because they're high growth. Look at this net income growth. This is the part I didn't believe that why I'm shocked the stock's not up more. The net income grew 80% year over year. What was the revenue? So revenue's up 50, net income's up 80. So they grew their margins again. This is a $1 trillion company with 42% net margins. What this company does is they make those little 5 nanometer wafer chips. They're in everything, like your car window, your washing machine. And look at their market share. It literally went from 61 to 67%. And if you buy the stock now, you get an over 1% yield. So it's like you get exposure to NVIDIA with the high yield. Anyway, Taiwan Semi is one I'm looking into picking up. They're so great. All right, let's see. Can you check PCAR out? Let's check it out. I am a truck driver. Hey, maybe so you know this company. Let's check it out. So this is a $51 billion company. So they're huge, actually. Wow. $51 billion company. Let's see the multiple. So look at that PE. It's a 16. So seems like a pretty fair valuation. And hey, you're right. Look at that. 71% of the revenue comes from just truck. But yikes, look at this. This might be why the stock is kind of struggling. Looks like the truck revenue is down 19% year over year. So we do kind of want to see the growth come back. I think that's probably why, like if we zoom out on the weekly, the stock's kind of been flat for a while. The slowing growth right there, the truck's revenue. How about parts? How's the parts revenue doing? That's up 3% year over year. Better than being negative, but they're still making a boatload of money. So even though it did decline, they're still making well over $2 billion a year. They're making like $2 to $3 billion a year. And hey, if this is the bottom, then it'd be easy comps to grow this. They pay a dividend, 1.28% dividend, only a 15% payout ratio. You know what? That's actually a good rebound play. I'll put them on the watch list. So if we get a recovery of the truck industry, hey, yeah, they've been a really good performer since 2019. PCAR is really interesting. Yeah. What about ASML and UPS? Oh, I saw UPS first. Let's look at UPS. I sadly think UPS is at risk of a dividend cut. And they kind of deserve this huge decline, I think. So I actually don't know if I'd buy this one. I wouldn't nibble on this one either. Yeah, we get Disney earnings tomorrow. I'll check out Disney in a little here. So first off, UPS, the reason people like this stock is this huge yield. You buy the stock, you get a 7.5% dividend. That's what you're supposed to get like every year from the S&P 500. You're having a pretty good year. If you get 7.5% every year, that's a good return, I'd say. Definitely beats a high yield savings account. But here's the thing: they can't afford this dividend. So look, in the most recent quarter, they made 1.3. The previous quarter, they made 1.2. So remember that they made 1.3 billion of net income just this quarter. So if we go see how much the dividend cost, the dividend unfortunately cost 1.35 billion a quarter. So I just like showing you the numbers for yourself. You can draw your own conclusions. So I do think if the trend doesn't get better here, this one is at risk of a dividend cut. I mean, there's no chance of bankruptcy. They're still printed money, over $1 billion in net income a quarter, but that trend isn't good. The dividend payout ratio is too high. Might have to cut the dividend in half. So glad you recommended it. Hey, it's a pretty cool company, Mouse. Thoughts on APLD? Yeah, I haven't looked at APLD this stream, I think. So that's a company owned by Nvidia. So if you go to Nvidia's portfolio right here, they own ARM, CoreWeave, Nebius, and one of the stocks they own as well is APLD. They had a great day today. Wow. So here's kind of what happened. APLD and CoreWeave just went into a huge partnership together, and that's kind of why the stock went up a bunch. And of course, I feel like that was orchestrated by Nvidia. Nvidia owns both companies, and then, well, it sends them both up. So anyway, great news. This is like a data center hosting business. Yeah, like data center hosting, cloud service revenue's been good. So they are owned by Nvidia. I still would be careful. The financials aren't great there, but they are interesting. Good call on Broadcom. Yeah, TSM is really cool as well. Intel is rough. Yeah. Oh, here's a cool one. Carlos said thoughts on MO. So I can't talk about what this company does because last time I did, the stream got taken down. But just know this company has a sustainable high dividend yield. So if you're looking for a higher yielding play that I think, in my opinion, has a sustainable dividend, this is one I do think has a 6.5% dividend yield and only a 61% payout ratio. So again, my opinion, you're not going to outperform the market in the long run with this kind of stock, but you do get the nice yield. Like if you kind of look at them on the monthly, look, they're the same prices they were way, way back here before 2020. So again, you buy these to maximize your dividend income, and plus this past year it's had some monster appreciation. But there's the stock. MO, high yielding. Yeah, hey, thanks, Jello. Yeah, hey, twat. If you want to get this, Kuzi said, is this pre-recorded? Nah, you can kind of see the time in the top left. Let's see how AMD's doing and down 15. Hey, AMD is slightly recovering. That's good news. But yeah. Yeah, Incompetent, thanks. Yeah, hey, if you want to get this little software I'm on, if you guys like this software I'm using, it's actually a brokerage. If you want to download it, it's in the link tree in my bio. It's the first link there. It's an affiliate link too. So if you download it with my link and deposit $100, we'll both get some free stocks. So let's see here. Let's keep going. Have you checked out HALO earnings? So I think this is like a micro cap. Oh, they're on my watch list though. Hold on. I might actually like them then. Let's go check out the fundamentals here. So actually, they're not a micro cap. $7.5 billion company. There must have been something I really liked here. So I bet you they're really growthy. Let's go find out. So revenue and net income. Well, first off, this net income is huge. They're making over $100 million of net income a quarter. Net income grew 53% year over year. So net income is crazy, and revenue's up 35. Wow. So they're really growing their margins as well. Near 50% net margins on this company. So you go spend $100 on this on their products. Nearly $50 of that is after-tax net income for them. They're in it. That's why they're on my watch list. They're really cool, actually. MO has been part of the. Oh yeah, MO has some exposure of other stocks too, and they just like unbanned the JUUL stuff. Or I don't want to say the name because TikTok will not be happy. Someone said Nike stock. Hey, how are you feeling about Nike currently? I don't love this stock. I don't think this one's going to outperform the market in the long run. I used to own them. I actually sold out of all my Nike right here. There you can see all my buy orders and stuff. Yeah, that's what I love. You can see the history. But I actually sold out of all my Nike. That's because they cut all their ties with Amazon and Foot Locker. And guess what? Nike just brought back their partnership with Amazon. So Nike shoes are back on Amazon. They're back in stores. They're back in Foot Locker, and they're starting to gain back market share. So that's kind of the good news. We're going to hope that the future is going to be way better than what it is right now. And that's kind of why they gapped up right here. The earnings were terrible this day. The earnings were super bad, but they gave good guidance. And check this out. I still wouldn't buy the stock, but look, the revenue's down 12%, so they lost all growth. Nike's not a growth company anymore. Revenue's down 12, but the net income's down 85. They couldn't even afford the dividend, not even close. They only had a 2% net margin. So we want to see the growth come back there. But I don't know. I'll be careful with Nike. Bro, please, I can't find this. Yeah, hey, Prosper, here. Oh, sorry. If you go to the link tree in the chat there, go to the first link there, and you can get this little broker I'm using. Yeah, if you go to the link tree in my bio, first link. I'm saying link tree in my bio to the people in the YouTube stream. Yeah, there is. I think there should be a description if you scroll down. But yeah, go to the link tree right there, first link there. If you want to use my affiliate link, thank you. Or you can just type into Google like Moomoo. Someone said thoughts on SPG. Oh, Simon Property Group. I was just at. Wait. Let me know. Wait, you mean Simon Property Group, right? Or maybe you mean SPC Holdings, either one of, or Spark Power. Let me know if you're talking about Simon Property Group. We'll get right back to it. But I was just at a Simon Property Group mall, and it was packed. The Starbucks there was packed. The Taco Bell there was packed. Anyway, ever since COVID, we'll just talk about this company because I know a lot about them. Simon Property Group. After COVID, there was a huge dilemma with this company because a lot of their like people in the malls weren't making any money. Like the rent was just too much. So now what Simon Property Group does is they just take a percent of all the store's sales. So if you see like if you're at a Simon Property Group mall, just some random like store, like a jewelry store or something, they just take a percent of all the sales instead of charging them rent. That's something they did after COVID. Anyway, it's working great for them. They're making a boatload of money, 600, 700 million of net income a quarter. But again, this is in the mall industry. They own malls. A lot of people don't want exposure to that, and I totally understand. I don't own them, but they're also a REIT, a real estate investment trust. They own the triple net leases for the malls and huge yield, 5% yield. It's actually a sustainable 5% dividend because they're a REIT. They actually have to pay out most of their taxable income in the form of a dividend by law because of that. So anyway, because they're a REIT, a real estate investment trust, 90% of their assets are real estate. AMD's going up. Hold on. Let's go check. That'd be great. Let's see here. Yeah, hey, look at that. AMD, a little bit of a recovery. That's great news. I hope Supermicro can start to follow that trend. Same with TOST. TOST is another company that reported earnings today, and they fell. Oh, there's my position kind of at the bottom there. How about Powell Industries doing? No. RIP my Powell position. They are down 13% right now. Dang, man. I got to look at their earnings after this. But hey, drop a like on the stream for me. Let's see. Let's keep going here. Yes, do you max out your Roth IRA? That's something I'm trying to work on. So here's my Roth IRA right here. I like being fully transparent. It's only worth $1,500, so we definitely haven't maxed it out. You know, you can deposit $7K a year. That's how OP the Roth IRA is. I really recommend one if no one has one. It's a tax-free retirement account, and you can use all this money as a first-time down payment if you're a first-time house buyer. So even though you can't withdraw the money until you're 55, you can use it as a first-time house payment. You get certain exemptions for medical reasons you can withdraw. Anyway, really cool. If you like double your money on a stock and you sell it, it's tax-free. You receive a dividend, tax-free. But anyway, what's up, Edzilla? Hope you're doing good, brother. Have you ever traded SYK? What is this one? SYK, Stryker Corp. I don't think I've heard of this one. I've never owned this stock before, but it looks like it's done pretty good. A huge one, actually, $150 billion market cap. So that's a really big market cap. So MedSurg and neurotechnology, orthopedics. Look at that revenue growth. It's up 9% year over year. What about the MedSurg? Yeah, so it's like growing double digits. Let's see. Revenue up, 11% year over year. And on that, they're making like 800 mil, 600 mil of net income every quarter. So they're making a lot of money. You get a 1% dividend with this company. So yeah, there's like a medical play. And some of these niche industries, they own MedSurg and neurotechnology. All right. Can you check MNST? Is that Monster Beverage? Hey, MNST. So Monster Beverage, a lot of people love their drinks. I like Monster Energy drinks. MNST. I want to pull them up. What's up with Amazon? Hey, we'll go check out Amazon too. I actually bought a share of Amazon today. Was that Main Street Capital? Yeah, I do own Main Street Capital. I'm holding 35 shares of AMD. Hey, nice, Thermo. Before today, your position must be doing great. So here's Monster Beverage. This literally 92% of the revenue is their Monster Energy drinks. Then they own this strategic brand is actually, what's it called? Bang Energy. So here's actually what happened. Does anyone remember Bang Energy? It was so popular on TikTok like years ago, like 5 years ago. So many TikTokers are sponsored by Bang Energy. Well, Bang Energy used the word on their can, super creatine. Monster sued them for $400 million. They lost the lawsuit. Bang Energy went bankrupt, and then Monster Beverage bought out Bang Energy. Pretty crazy story. But anyway, I like this one. They're making a couple $100 million of net income a quarter. They own like if you go to a gas station, usually they own the other brands too. Oh, it's like I'm not even going to try to remember, but they own some other brands too. Anyway, let's see here. Rumble looking crazy. What's Rumble doing? This is a company I wouldn't really recommend anyone touch. They burn a lot of money. Let me actually go to the net income and see here. Yeah, look at this net income. I mean, it's not good. They're burning like 30 mil a quarter. They had a little one-time adjustment this quarter, but anyway, actually, they got a donation from Tether, the crypto people. They donated them like a bunch of money. So that was nice. I don't know. I've never seen that before. I've never seen just someone donate to a stock. But that's like a free speech platform. All right. Let's see here. Thoughts on what up, koozies? Let's see. LEU. What's the stock? Centrus Energy. So this one's done very well. Wow, look at that. It's close to an all-time high. It looks like a $3.6 billion market cap. Low enriched uranium. So yo, uranium has been on fire, especially these US comes because we're really trying to stop buying Russian uranium. We're trying to stop buying uranium from all these other countries. So it's cool to see that 70% of the revenue comes from uranium. So honestly, if you're looking for a uranium play, just buy ticker symbol URA. This is the Global X Uranium ETF. And I'm pretty sure it's at like all-time highs right now. Oh, we can look at IBM too. Yeah, here's the URA ETF. It's pretty much at all-time highs as well. So yeah, ever since the executive orders to power nuclear reactors have been on fire, nuclear reactors need uranium, that yellow cake uranium. Happy to share your lives again on my feed. Hey, what up, Sparsh? Hope you're having a good Tuesday. Appreciate that. IBM. So this is a software consulting company. Let's see how they're doing. I like this one for the dividend, I remember. Dang, my phone is getting low. It's lagging me. I apologize there for the lag, but we should be good. So here's IBM. They gapped down on earnings. So let's go see what their earnings were. We can see if we can figure out why. First off, if you buy the stock right now, you get a 2.6% yield. So pretty nice dividend on this company. So yeah, they're in software, consulting, and infrastructure. So let's see how they're doing. Software revenue is up 9% year over year. I mean, single digit, but still decent. Consulting revenue up 2% year over year, and infrastructure up 13. So it's like a mixed bag. Let's see. They beat on revenue, they barely beat on net income, and they beat on EBITDA. So they triple beat on every metric. So I wonder why the stock fell. Maybe they gave bad guidance. I don't know. But let's see. They're making like $3 a quarter. How much does their dividend cost? So they're making like $2 to $3 a quarter, and the dividend cost, where was it? Dividend cost $1.56 billion a quarter, so they can't afford the dividend. Let's see, they're buying. Oh no, they issued stock this quarter. Never mind, they're not buying back their own stock. Anyway, IBM, they're interesting. I kind of like Google more. Should we look at Google? We can't really analyze AMD because they just reported earnings, so we can't see the earnings yet just because they came out of now. I mean, we can. I mean, if we go to the news tab right here, let's see what some of the news says. There's a lot of news here. I don't really want to read it. AMD CEO says Oracle is building. Okay. Oh yeah, Oracle and AMD have like good long-going partnership. Let's see. TRMB stock. What's this one? TRMB Trimble. I've not heard of this company either. Yeah, we can look at ASST. Just hit 1300 shares. Yeah, what up, Alex? We'll check out ASST. Yes, sir. So this is a $19 billion company, and they're trading at a 13 PE, so that seems pretty reasonable. Let's go see what they do. So field systems, architects, engineering, construction, and transportation and logistics. Half the revenue comes from the US and all these other countries. Yo, King Aztec, hope you're doing good too. What's up? Let's see profits though. So yeah, they're making net income every single quarter. They had a little one-time adjustment this quarter, but if you go to operating profit, they're pretty much making just around 100 million in net income every quarter. Kind of average it out there. Deleveraging their balance sheet. Like, look at this. The liabilities used to be 53% of the total assets. Now it's only 39%. So that's good news. They're deleveraging a bit. So, hey, that's interesting. All right. ASST. Let's check this one out. I don't remember this one. Asset entities. Ooh, so hey, I would be careful with this one. Yo, Atomic Joe, we'll look at HAFN too. Here's why I'd be careful with this one, Alex. Like, to be honest with you, like, look at the market cap. This whole company is worth $55 million. So I like to stay away from those really, really tiny companies. Only $55 million. That's a little too risky for me because look at this. They're losing $1 million a quarter. Do they have sales? They're doing 170,000 of sales a quarter. So not much. So again, $55 million company is really a momentum. Doesn't take much to move them, but I just be careful with that one. Let's see what this one, HAFN. What up, Atomic Joe? Hafinia. Let's see. Do you think everyone putting money into financial markets said this is a bad sign? Yeah, hey, that's an interesting thesis there, Sparsh. I kind of agree with you. Yeah. So here we go. A $3 billion market cap, and that's a low PE ratio. Hold on. PE is a 4.9, but the industry average is a 4.8. So what industry are they in? I have no clue. We can kind of see some of the other stocks in their industry. Let's go see. So medium range. I didn't know they were in that industry. Please don't take me down TikTok. So they sell yeah. So anyway, actually let's click out of this stock. 19% dividend yield. That's crazy. All right, sorry. Last time I went over a company like that, they done took down the stream. So anyway, yeah, here's a great company, SOFI. So SoFi Technologies. I do own this one, by the way. Here, I'll show you my position in them. And we can just check out Supermicro's doing. Yeah, dang. Supermicro stood on 16. AMD's down 4. Let's see if we can find the news around T-Mobile. T-Mobile didn't report earnings today, but look, they gapped down. Let me see if I can find it out. T-Mobile completes asset acquisition. Oh, so they acquired a company. I wonder why they're down. You know what? I'll look into that later. Oh, well, more noise. But wait, why was I? Oh, yeah, SoFi Technology. So I do own this one. I love this company. I regret every share I've ever sold a SoFi. And in my opinion, they deserve to be doing this good. They're such a great growth stock. And check this out. Here's what I love about them. If we go to the financial services business, because they're a fintech, they have their own banking charter and stuff, which are really hard to get. The financial services revenue's up 101%. That's monster growth. I mean, the revenue's literally doubled right here. So that's why I think it justifies this crazy stock price appreciation. The total revenue of the company's up 42, and on that they made 100 million in net income. They're really profitable. I mean, they're making net income every quarter. So I like that. I thought they were a shipping company. Yeah, I think they are a shipping company, Atomic Joe. I don't know. I got to do more research on that company. Uh, let's see. Yeah. So SOFI is one I really like. GE Veranova. Hey, yeah, the whole electrical business, the PJM auction for electricity prices in the future are so high. I mean, they're expecting uh electricity demand, just total, to grow like double digits through 2030. So that's really going to help out GE Veranova as an unregulated utility. And they're printing money right now. Look at that, $500 million in the most recent quarter. So they're making a couple $100 million every quarter. Very profitable. You can see it comes from power, wind, electrification. Ever since the GE spinoff from the healthcare and the aerospace business, the management teams have really been able to focus on margins, and it's really helped out them. So GE Aerospace has been done really good too. So let's see, TMO, Thermo Fisher Scientific. So this is a healthcare play. And let's go check out the earnings. I remember looking at this one before. Nothing really blew me away on this stock, but let me go reanalyze them. Let's see how they're doing. So they actually sell laboratory products, life science solutions, and analytical instruments. How's that doing? Down 3% year over year. Laboratories up 4. But let's just see the total revenue growth. Let's see. Revenue is up. Yeah, see, revenue's up 3%. So not too growthy of a company. That's probably why they have a low PE. What was the PE again? Yeah, the PE is at 26. Just because they're not too growthy. So the lifeblood of the company, the revenue's up 3. Net income's up 4, though. That's not too impressive. But the margin did go up 1%. But hey, they made 1.62 billion of net income. They also pay a small dividend, less than 10% payout ratio. So anyway, I'd like to see the growth kind of come back there. Yeah, Future Bank SoFi. They're so innovative, Bank of the Future. What's on your watch list? I mean, let's see. These are the things I've most recently added if you kind of want to screenshot it. Some of these are jokes I didn't mean to add or anyway. Yeah, anyone heard of GoDaddy? Like GoDaddy is like the website domain name, or what's that called? Like a URL, yeah. They actually well, I have a subscription for them. They forced every customer. This was crazy, and I'm upset about it, but explains why the stock had done so good. This was back around here. They forced every user to pay a monthly subscription no matter what, and the stock blew up after that. So I am watching this one. They did start to bleed, so I'm starting to maybe look into that position. Anyway, they're a random company. Richard said Salesforce. Hey, I love CRM. So Salesforce right here. This one, though, has shown some slowing growth, and I think it's disappointed investors a little bit, but they did just acquire INFA. Actually, let me pull that up real quick. So INFA stock, this company just got fully acquired by Salesforce. So that's kind of why the stock looks weird and flat. That means they got bought out. So Salesforce now owns this company. That's going to bring some growth to the company. Inorganic growth, but still growth. I mean, they're going to add 400 million of revenue a quarter. The net income's a little choppy, but still should add net income. So anyway, let me go back to Salesforce, though. They own Slack. I love Slack, man. Best asset. Amazon uses Slack as well. It was one of the most expensive acquisitions they've ever made. Definitely overpaid for it, but it's a great asset to own. So here's why I think investors were a little disappointed. The free cash flow only grew 3.5, still an incredible number, 6.3 billion, but the free cash flow only grew 3%. Net income only grew by 0.5%. So I think investors just wanted a little bit more growth. Sales were up 7.6. So I think investors want a little more growth, but still, I love this company. They're very diversified, services, sales, they're number one market share for CRM and a lot of other industries, platform, analytics, markets. So anyway, I like Salesforce. Yeah, getting hammered on Salesforce lately. I think the risk to reward is pretty good down here on them. But yeah, the software stocks have been getting hurt. Like if we look at ServiceNow, even I think they reported earnings and then sold it all off. Yeah, look, they reported earnings this day. They went up to 1,000 and now they're down. Dang. See, a lot of software names have been kind of struggling recently. Like my DocuSign, the stock I never talk about. This one it's kind of been struggling too. All right, let's see here. What are your views on defense contractors like Lockheed Martin? Oh, PS, don't buy TMO. Pfizer's. Hey, yeah, well, did Pfizer report earnings yet, or is Pfizer tomorrow earnings? We'll check that out. But here's Lockheed Martin. This one did gap down, and I actually think they do deserve to gap down on earnings. Unfortunately, I hate to say that because I really like this stock. So here's where the revenue comes from. They're in aeronautics, mission systems. They're an aerospace and defense company. They sell missiles and they're in the space industry. So I love the industries, but it's the profits and the slow growth that's hurting them. Like, look, revenue's only up 0.1. The net income fell by 80% to just 300 million. And that was unfortunately real. So I think that spooked investors a little bit. That's going to make the payout ratio go up. So, but still, the PE is a 24. Yeah, look at that. Because of that huge net income miss that made the PE, it's so hard to see it gapped up right there. Anyway, be careful with Lockheed Martin. I could maybe see it going a little lower. The earnings understandably made the stock fall. Hey, what up? Oh, Bear Belly, thanks for the nice words. I appreciate that. All right. Let's see here. How about BINI? Have you looked into Neo, Chinese EV? Neo, here's the thing. Here's a company that I really wouldn't touch, to be honest with you. So just remember this number. The whole company is worth $10 billion. So first off, they're Chinese, but kind of remember that. The whole company is worth $10 billion. Let's go see what their profits are. They've also been issuing a bunch of shares while the stock's at all-time low, which isn't great. But I want to share with you the profits of this company. This is the bad news. So remember, whole companies worth $10 billion. You're buying a company that literally loses nearly $1 billion of net income a quarter. They lost $930 million this quarter, $980 million of net income. I mean, they're leveraging up. I mean, look at that. They used to have more assets than liabilities. Now they're kind of the same. It's at 100%. They've met exactly. So not exactly a company I trust, and they're Chinese. So I would just be very careful with Neo. Those net income losses scare me away from buying it. They only have like 2 years left of that, and then they're fully bankrupt. Okay, TikTok. Saying I'm AFK. Dang, that's loud too. All right, we're back. Sorry. Every hour, if I don't move my cursor or on the TikTok app, it says I'm AFK, but we are not AFK. We're back. All right. What up, Miami? They would have been quiet for a while. I would say 6th Gen's coming soon. I forgot what we were talking about there. Oh yeah, we could look at Disney too. Cat. Yeah, let's look at Caterpillar real quick. This is like your heavy machinery company. They make generators. They are in construction. The stock's at an all-time high, and here's why I think this one could go higher. So look at this PE ratio. It's a 22. Oh, and by the way, Atomic Joe, thanks for the rose, the heart there, and Vipidly, thanks so much for the rose as well. I really appreciate that. But look at this PE ratio. Even though the stock's at all-time highs right now, I think it could continue to hit all-time highs. The PE ratio could stretch up to a 23 or a 25. I think there is a little bit more upside potential. And look how diversified that they are. Energy and transportation, construction, resource industry. So anyway, Caterpillar is cool, 1.3% yield, only a 25% payout ratio. So yeah, Caterpillar is one perfect dividend growth stock. I just buy that one and hold it for the long run. So someone said Snapchat stock. Yo, Randy, what's up, brother? So Sam said, what app are you using? Yeah, hey, sorry, Sam, if you want to get this app I'm using, I'm actually using a brokerage. The software I'm using, it's in the link tree in my bio, that very first link there if you want to get this little broker I'm on. It's an affiliate link too, so if you deposit $100, we'll both get some free stocks. But anyway, oh, no way. Uh-oh, Snapchat is down 17% after hours. I didn't know they reported today. So dang, Snapchat's down 17%. Here's one cool thing we get here. We can see their daily active users. This is a cool metric. They have 460 million daily active users. But I remember they were struggling with net income. I mean, look at this. They're literally losing a couple hundred million every quarter. They had some saving hope last quarter. They made net income, but then they lost another 140 mil. So I wonder if they lost a bunch of net income again. I wonder if I can find something. You know what? Let me go to the intelligent comments here. What are the comments saying? You know what? Oh well. RIP Snapchat. All right, let's see here. What do you think of Nvidia? Thoughts on buying a share? Oh wait, let me look at Disney. Then we'll get to Nvidia, and I do own this one, by the way. And we can go quickly check on how Supermicro's doing. Dang, RIP Supermicro and RIP AMD. We're down a bunch on them today. But one company that reports earnings tomorrow is Disney. So tomorrow, make sure to come back to the stream if you want. We're going to be streaming live for earnings if you want to watch it with me. We also get McDonald's and a lot of other companies like Airbnb, Uber. They both report earnings. So I'm very curious to see what happens there. But check this out. Disney is like the most profitable they've ever been thanks to their streaming service. So actually, let me go to the free cash flow. That might look better. But yeah, operating cash flow 84. Let me just look at the FCF, which is free cash flow. Yeah, free cash flow of nearly $5 billion this quarter. Net income was $3.4 billion. They've gotten their streaming service extremely profitable. They just rose prices. They made in starting 2025, at the very beginning of 2025, everyone's subscription for Disney Plus, ESPN, and Hulu went up by like 20%. And all that, 20% gain is all margin for them. So it's making them a boatload of money. Anyway, I'm curious to watch that tomorrow. They're also opening a park in Abu Dhabi. And no way, bro. RIP Powell Industries, we're down 13% on this company. Yikes. That's RIP $300 holiday. Hey, make sure to drop a like on the stream for me. By the way, I sell nothing. Watch out for people impersonating me. I don't have a course, a book, none of that. No Discord, WhatsApp, Telegram. Sell nothing. Watch out for people impersonating me. Only thing I do have, though, hey, best way to support me if y'all want, go watch the stream from YouTube. I'm streaming on YouTube as well. If you miss anything, you can replay it. My YouTube channel is called Nathan Robert. You can just type in YouTube Nathan Robert. It's also in the link tree in my bio. All right. Yeah. RIP Snapchat. Do you post your earnings report? I don't really bet. I mean, I just have positions in them. Like I didn't buy this position in AMD just for earnings or Supermicro just for earnings. I've owned them for a very, very long time. So, but tomorrow, here, I'll show you what reports tomorrow. If you want to come back to the stream tomorrow, make sure to hit the follow button. We'll be watching what happens tomorrow. A lot of great companies. You've heard it before. NVO, first off, Novo Nordisk, which owns Ozempic, reports. Huge EU company. But then we got Disney, McDonald's, Uber, Shopify. I love Shopify. AppLovin, DoorDash. You maybe heard of DoorDash before. Airbnb reports tomorrow. Airbnb, I wonder how Airbnb's doing. Fortinet, huge cybersecurity company. ET, Honda Motor, MetLife. We have our life insurance through MetLife. So hey, a lot of interesting companies report tomorrow. Make sure to come by. We had a lot of interesting earnings today. AMD earnings, kind of disappointing. Actually, today was very disappointing. All four of the stocks that reported earnings of mine all went down a bunch. So anyway, let's keep going here. RIP Open Door. Well, what happened? Did they just fall after hours too? I wouldn't doubt it. Yeah, I've been telling people stay away from this stock right here, down 25% right now. So I believe it. I believe it. So, oh well. We can maybe look into them. Hey, what up, Adrian? He said qubits on Thursday. Yeah, this is the main quantum stock. This is a quantum momentum company. So basically, whenever the quantum stocks are booming, this one moves the most. But again, I would stay away from, as much as I love you, Adrian, this one's a really tough buy, in my opinion. A $6 billion company. Like, this is a fun swing trade. Like, the momentum might be gone in a year. Like, this could maybe fall a bunch. But I'm staying away from this one. I just can't pay that market cap. But they did just beat on earnings. $6 billion company for a company expecting $2 million of revenue next quarter, then $3 million. But they did have a nice beat. They're expecting $10 million. They made $15 million. So, hey, maybe they'll beat on earnings again. Who knows? Well, here we go. Costco. Look at your phone battery. Yeah. Well, we're just going to stream till my phone dies. It's all right. Plus, I got a portable charger close to me. For some reason, whenever I have the portable charger, it like lags the Wi-Fi. I don't know, whatever. So here's Costco, um, hold on. Don't watch out for that person in chat impersonating me. I just removed them. All right. Yeah, again, watch out for people impersonating me. I'll never DM you or follow you. I don't sell anything, no course, book, Discord, none of that. Anyway, here's Costco stock. This is a great grocery store. I mean, to even get into a great business model, to get into a Costco, you have to pay for a subscription, So they make every month this high margin subscription revenue, and consumers love going there because you're buying stuff in bulk. You feel like you're getting a good deal. Well, you are getting a good deal. You buy like a 50 pack of Coca-Cola cans or something. It's a way better deal, whatever. So they're making a boatload of money, 1.2 billion a quarter. They have a nice dividend. They sometimes pay special dividends as well. Actually, I'll show you that. Like, look, they raise their dividend every year. They just rose it from $1. Used to get paid $1.16 every quarter. Now it's $1.30. So they raise their dividend every year. Look, it used to be $1 too. But right here, they paid a $15 special dividend. So that was a huge little gift to the shareholders there. They'll probably do one again. All right. Let's see. Hey, what up, Jay? Thanks, man. Did you see ALAB earnings? I'm up 150% of the stock now. Yo, Ahmed, dude, that's awesome. That's been an incredible performer. They just have such great fundamentals. Yeah, hey. Yeah. Yo, I hope Adrian, what's up, dude? I do love the quantum industry though. Like, it's not a pure play, obviously, but Google, IBM, Oracle, even those are other quantum plays. Microsoft, they're not pure plays, but they'll probably have the money and the talent to be the leaders for the industry, especially Google, I feel like. But anyway, here's Astera Labs. Look at them on the one day. They're up 11% after hours. So yeah, congrats if you own them. This is the kind of stock I'd want to own. First off, incredible balance sheet, no debt, lots of cash, takes a lot of risk off the table having no debt, and they're super growthy. This is honestly the best part. Like the revenue, after growing 269%, it grew another 144% to 160 million. So incredible growth rate. At this growth, what's it going to be this time next year? Also, on that, they made net income, 31 mil, 25 mil. So Astera Labs, I mean, could only imagine they're just going to keep up that trend. I see ANET ripping. We just looked at ALAB, and there's also ANET, which is funny. They're kind of confusing. They both reported today. This one's also up 15% right now. So both of these companies, this is the one that prints money. If we go to the net income down here, they're literally, look at that, 800 million a quarter, up from 630 mil. So this company, incredible net income. Obviously, they literally just reported an hour ago, so we don't have the numbers yet on here. But someone said Amazon, it took a hit recently, but I think it's going to hit all-time highs. I actually agree with you that it's worth probably looking into because again, not financial advice here, but I actually bought a share of Amazon today. So I did buy one share of Amazon at 214. So that's one thing I did. I also bought one more share of ticker symbol COKE, Coca-Cola Consolidated. That's a share I bought. And one more share of Perion Network. Or we bought the share at $10.70, and then it fell another 5%. So that was fun. And exercise is 700%. Joby call. Really, Joe? That's crazy. Do you have any companies making data centers on the radar? Yeah. You ready for this one? AMD. So this is like, so data centers need GPUs to run and function and stuff. And this is why it's genius for AMD to get into the data center industry. Look, it's 50% of the revenue now. It's been, look at these year-over-year growth rates. Incredible growth for AMD's data center business. Data centers need GPUs, and AMD makes GPUs, and they can give themselves the newest model, the quickest, and at the cheapest price. So it's genius for them. And obviously they just reported earnings. We don't have it yet, but their growth has been really good. Really good balance sheet as well. No net debt on AMD. Net income grew to 700 mil. Free cash flow was also 700 mil. So really good numbers on AMD, but we got to see what their earnings report are. There we go. Supermicro is $48 right now. Yeah, hey, look, dang, we're down 19% on Supermicro today. So RIP my position. TOST is still down 5. Anything up? Yeah, we had a few gainers. ClearSecure had a really good earnings report this morning. ClearSecure reported earnings. They had good ones. Despite all this huge red, I'm glad I have a diversified portfolio because we're only down 1% on the day. Not too bad. All time, we're only up 14%. We've definitely underperformed the market. Again, I like being transparent. We've definitely underperformed the S&P in the long run, but We are up green all time, which is good. And but bro, we are down 1% on the day. All right, let's see. Is Dave a good company? I think so. Dave reports this week as well. Now we can look at Dave. We haven't looked at them yet. I do own this one. Oh, we can look. Actually, let me look at Lennar first, and then we can look at Dave. So this is a home builder right here. The home builders, I love this industry because they trade at low valuations and they have high dividend yields with low payout ratios. So basically, look, this is a 9.9 PE. That's right in the historical average of 9. So the home builders, yeah, industry average is a 10. They don't trade at ridiculous valuations. And yeah, that's 93% of the revenue, home building. So if we look at the dividend, this is kind of the good part. You get a 1.7% dividend yield and only a 14% payout ratio. I mean, that is crazy. I know so many other companies with a 1.7% dividend yield with like a 40, a 50% payout ratio. So that's an extremely low payout ratio. It's just because the valuation is so low, 9.9 PE. So yeah, would be careful though. Net income did fall 49%, but let's see. They made $481 million this quarter. Let's go see how much the dividend costs. You go to the cash flow statement, and the dividend cost them, oh, look at that, only $133 million. That's nothing. So anyway, yeah, they could still easily afford the dividend despite the drop in net income. They're cool. They're a home builder though. So if you don't have exposure to the home builders, that could be an interesting one. All right. Oh, wait, what was the stock I wanted to just look at? Uh, oh, Dave. Yeah, okay, Dave. And then we can look at Uber. Yeah, I love Uber, ASML, AEO. We can look at that one too. So here's Dave. I do own this one. It's actually been one of my best performers. I took a lot of profit on this one. Now I just have house money in this stock right here. Let's see. Yeah, ticker symbol Dave right here. So look, I bought 7 shares at $78. And then on 4/2025, and then in 6/2025, I sold it for 222, 272, 272. So I made all my money back, all the money I put in back, and I still get to keep some exposure to the stock. They've just had some monster performance. So here's what I didn't even expect this. They even beat my expectations. They're just so growthy. So check this out. We go to the revenue right here. It's up 50%. I mean, that's the highest growth rate they've had in a long time. So revenue's up 50%, and they made $28 million of net income on that. Actually, really want to look at operating profit. They are the most profitable this company has ever been. So extremely profitable, and also the free cash flow. This free cash flow growth is nuts. It's up to $43 million. They trade at like a 4 or 5% free cash flow yield. So anyway, pretty cool company. Deleveraging as well. Liabilities were 45% of the assets, now only 36, while growing assets. So Dave is really cool. Yeah, cash from operations is incredible. So super growthy company there. Do you expect SoFi to keep dropping? Not much. Yo, what up, Daisy? Yeah, I really like SoFi, actually. I think they're going to, in the long run, continue to be a winner. So let's go back to this stock. Where was it? Oh, Uber stock. Yeah, so Uber, I really like this one. They print free cash flow. They just bought $1.3 billion worth of cars from Lucid. But this company reports earnings tomorrow. So on August 6th, which is tomorrow, they report earnings. So basically tomorrow, they're either going to go up or down a bunch on earnings. And look at this. This is what I love about Uber. They print money. I mean, look, $2.25 billion of free cash flow just this quarter. I mean, they're making billions of free cash flow every quarter. Operating profit was at a record as well, $1.23 billion. They had a little one-time adjustment to their net income, making it $7 billion. So the PE is artificially low, but still super profitable, super innovative, deleveraging like crazy. Let's see how the Uber Eats business is doing. Like the delivery revenues, Uber Eats, it's up 18% year over year. Mobility revenue is up 15%. So yeah, both businesses are growing. I like Uber. All right. I'm actually looking to buy them maybe in my Roth IRA just because I like them so much. So B said, or ASML stock. So this is like your chip making manufacturer. They make like the machines for 3 main customers. It's Samsung, Intel, and I think NVIDIA. Those are its only 3 customers, I believe. So they do have a bit of customer concentration. But this company just reported record earnings, but the stock is down bad on guidance. So I'll show you the good news first. Revenue's up 35, net income's up 86. So that means they're growing their net margins. I can't believe this. 35% net margins, a record net margin. You get a nice dividend, over 1% yield on this company. The PE is the lowest it's like ever been, a 24 PE for a company that's growing very nicely. But here's why the PE just collapsed. They gave guidance for the next full year. And in that full year guidance, they showed the guidance is single digit growth, like low single digit growth. So they showed basically no growth of guidance. So that's what's going to hurt the valuation there. And I think that's why they're starting to fall there. So let's see, AEO stock. AEO. American Eagle. So yeah, if anyone heard of American Eagle, they're like an apparel company. They just sell like shirts, shoes, and or I don't know about shoes, but look, these kind of companies don't really outperform in the long run. Like if you look at like an Abercrombie and Fitch or some of these other ones, they kind of look like this. Like this, literally, American Eagle is the same price that it was back in 2004. So you bought the stock in 2004, you're flat on your position. You know, they just sell a commodity. They just literally sell t-shirts under the American Eagle brand. Let's see, what's the PE ratio? Yeah, the PE is a 12. It's actually lower than that. I think they just, yeah, this was a little one-time adjustment, I'm going to hope. It wasn't. Okay, so that really was a big loss. Okay, well, they're normally making, you know, like 80 mil, 100 mil a quarter. So anywho, yeah, you don't want to see that. The growth is down 5% year over year. Not great. What do you think of what is Reposy Track? Hey, Iggy, if you give me a ticker symbol, I don't know what the stock is without the ticker symbol. So give me the ticker symbol. I'll check that one out. What's this one? Yeah, no problem, Sing. Hope you're having a great Tuesday, by the way. What do you think of Rolls-Royce, RYCEY stock? So yeah, Rolls-Royce, a lot of people know this company for the cars. You know, Rolls-Royce sells a lot of cars, but the real reason this stock is doing so good is because they're an aerospace and defense company. They sell jet engines, a lot of stuff like this. So literally half of the revenue actually comes from aerospace. It has nothing to do with cars. So they're actually an aerospace company. Then they're in defense, power systems. So really cool company. Only 28% of the revenue comes from the US. You know, very diversified in terms of geographically. I mean, 13% UK. Anywho, what about net income down here? Let's see. Yeah, wow. So for the first half, because this is an American company, for the first half of the fiscal year 2025, they made $6 billion of net income. And also, look at the balance sheet. They used to have more liabilities than assets. Now they have more assets than liabilities. Great news. So Rolls-Royce is cool. I can see why they're at all-time highs. Let's see here. Ticker symbol U. Hey, Clear Secure. I actually own that company in my account over here. Let me show you this. Clear Secure, they're up on the day. So let me search by. So yeah, Clear Secure. This is that company. If you've ever gone into an airport, you see like those people wearing a Clear Secure shirt. It's like a biometric scanning thing to like get through the airport faster. If you've ever seen one of those, and they're publicly traded. You know, it's a very uniquely positioned company. Not many stocks can get into a highly federally regulated industry, you know, an airport. So pretty crazy. This is a cool company. I do own some of them, so I might be biased, but the CEO is very cool. I listened to one of the earnings calls because he looks at every week as 2% of the year. So because it kind of is, you know, 52 weeks in a year. So every week is just around 2% of the year. He never is such a culture efficient company. I love the culture mindset, the workforce there. They look at every week as 2% of the year. They're like, hey, we want to delay this project for 3 weeks. Well, hey, that's 6% of the year. That's tough. Anyway, look at this net income. That's kind of the best part. They're making net income every quarter, and look at these year-over-year growth rates, up 20% year-over-year. Really good growth. So really profitable company. Also nice yielding, dividend yield play, 1.5% yield. So pretty cool. I do own that one. Oh, ticker symbol track. Yeah. Hey, let's check it out. And actually, let me plug in my phone here. Oh, this one's on my watch list actually. So there must have been something I liked about this stock before. Let's check it out. So TRAK. So first off, I would be careful. Only $290 million market cap. So that's a very small market cap. So the whole company's worth 300 mil. Let's see. Oh, so this is the good news. So you're buying a company worth 300 mil. You're buying a company that's making around 2 million of net income a quarter. So they are profitable. They are making net income, but that's actually crazy margins. Again, it's a very small company, only doing 20 million of revenue a year. But they have a 30% net margin on that. So they're making, 2 mil a quarter. Really good balance sheet too. No debt, lots of cash. So actually, that's why I put them on my watch list. The risk reward is actually pretty decent. I mean, not financial advice. It doesn't look like there's any bankruptcy risk. I mean, they're making net income every quarter. They have no debt. They have a lot of cash. So they're interesting. Only worth 300 mil. Eduardo, I didn't see this one. He said Palantir. Yeah, let me go back to Palantir. Did YOU make a profit after the close that AFL earnings were much? I don't know. Wait, are you talking about ticker symbol YOU? Did you make a profit? AFL earnings. I don't know, Michael. Are you talking Aflac? I own a Progressive. Oh, but anyway, here's Palantir stock. This one's at an all-time high today. They had outstanding earnings, but the valuation's too high for me to buy this one. I mean, the price to sales, not price to net income, but price to revenue is 118. So they kind of need to double their revenue by 2030 for this to be somewhat reasonable. But here's why they might actually pull it off. They have incredible growth. I mean, half the revenue comes from the government. Look at this. The government revenue is up 49% from the previous year. Like, that's the kind of growth you want to see. That's the highest growth rate it's been like ever. Look, I don't see another 49%, 45% last quarter. So the growth rate is growing. And for the commercial revenue, it's up 46%. Also the highest growth rate I've ever seen on here. So the growth is super growthy, and the net income's at a record, 330 mil of net income, 32% net margin, no debt at all on Palantir. So debt-free company. And look at this cash. Cash went from 4 bill to 6 bill. So anyway, Palantir is a beast, but valuation looks a little too high for me. Videos by, he said, AMD earnings. I see market, they're down 8 or 6%. Yeah, man, AMD did fall. Let me actually pull up AMD again, just show you. I just like being transparent with my L's. So let's see. 8% phone battery. Yeah. It's rough. What up, Gabriel said, Zebek network, mate? You're talking about XRP. Yeah, that's crypto. We don't really look at crypto. We mainly just look at stocks over here. But yeah, anyway, here was our Super Micro. We're down 17%, $100 on Super Micro today, 5% on AMD. T-Mobile did some acquisition and they're down 3%. So TOST is down 5%. Anywho, hey, don't forget to drop a like on the stream for me. It'd help me out. And by the way, I sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram. I'm just on here giving my opinion. Best way to support me, though, is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. If you just type in YouTube Nathan Robert, you'll find it. Or if you go to Linktree in my bio, you can find my YouTube channel as well. I'm also streaming on my YouTube channel. So if you miss anything, want to replay anything, you can do it on there, the YouTube channel. And the best way to support me is just to go from TikTok and watch the stream from YouTube. Trying to build up my YouTube audience. But I am about to end the stream here in like 10 minutes. So anyway, here's Amazon right here. I'm pulling this one up because someone asked about it, and I bought a share of them. So Miller's, I do really like Amazon. Think the risk reward might be decent down here to nibble on. I nibbled on this one. I bought one share today. So hey, every metric beat on this company. Revenue beat, net income beat by a huge margin. EBITDA beat. The margin growth is really the best part about Amazon. If we go to the net margin right here, they now have double-digit margin, 10%. It's the highest margin ever, thanks to really the AWS growth. It used to be single-digit, used to even be negative margin. So margins are at a record for Amazon, and I own that one, so I might be biased. But actually, here's one more thing about Amazon. So a lot of people, actually, let me go back further. A lot of people know Amazon for their online store, like Amazon.com, but that's only 40% of the revenue. Then they have their third-party seller services, and then the AWS business, the Amazon Web Services. Oh, it did update. So 2025 Q2, it grew 17% year over year, still $30 billion of revenue this quarter. Absolutely incredible. That's over $100 billion of annual revenue for them. So AWS brings the most of their bottom line. It makes like $10 billion of net income a quarter. Then they're an advertising play. Amazon's own Twitch. They own Amazon Prime Video. And there's like ads whenever you search stuff up on normal Amazon. It's the best place to put an ad. People already have their credit card in. People are already on Amazon ready to spend. So ads work great on there. They have the subscription revenue, Amazon Prime, obviously, physical stores. They own Whole Foods or 365 Whole Foods. It's like a grocery store. Anyway, Amazon's like an ETF in one. Kind of cool. Palantir hit $1 billion in revenue for the first time. Nice, Richard. Jose said SIRI stock. So Warren Buffett actually just bought a little bit of this stock. I think this one is just probably not going to outperform the market in the long run, to be honest with you. It's kind of a dying business. It's like radio, like Sirius XM. How is that doing? I mean, look at this. It just kind of slowly declines. What about Pandora? Isn't that like some other kind of radio thing? I don't know. It's also down 2% year over year. Let's see. Revenue down 1.8. So yeah, revenue just slowly declines, but they still make, 200 mil about of net income a quarter. It did fall 42%. Let me go to operating profit. Yep, down 5. So I don't know. I'd be careful with that name. Nothing's really blowing me away there. But I think they just have a really nice dividend. So you're basically buying that stock for the really high dividend yield. I think the dividend yield was like 5% or something. I'm not happy with Buffett with Siri. No, I feel you on that one. I think he bought that one in Q1 or something. User said what application it is. Yeah, hey, this is actually a broker right here. If you want to get this broker, the software that I'm on, it's in the link tree in my bio. It's that first link there. It's also an affiliate link. We'll both get some free stocks if you deposit $100. What's your 1 year return? Yeah, hey, Richard, now let me pull it up right here. In this portfolio, wow, look at that. Year to date, we're up 40%. 1 year return. Hopefully it'll let me do that. Oh my gosh, this has been our best performing portfolio, of course, but we're up 74%. Oh, well, that's not a simple. We want to look at the money weighted. Yeah, we're up 71% in the past year. All time, I think we're up like 101. We're up 100%. And this is cool. This app tells you if I were to just put all my money in the S&P, I'd only be up 50%. Oh, and hey, look at this. This is kind of cool. You can see all these blue circles is every time I've deposited money. So look, it should show it. Like I deposited $49 on that little dot there. So all these blue dots is every day I've deposited. So, my account, look, when I first started in 2023, $200 account, I only had a couple $100 in. So it not only, it grows as I deposit more and as the stocks appreciate. Anyway, that's the portfolio. What will happen with AMD now? I don't know. I really need to dig into the earnings. I've been streaming, so I haven't really deep dive into the earnings, but we can look at that. What is up, Matt? Hope you're having a good day. NVO, Ryan said NVO. Yeah, NVO stock reports earnings tomorrow. So if y'all want to hit the follow button, we'll be streaming for tomorrow because I own Disney, McDonald's. Actually, tomorrow's insane. Better than today. So like if we go here, this is all tomorrow. NVO, this is the company that owns Ozempic. So weight loss company reports Disney, McDonald's, Uber, Shopify, Apple Oven, DoorDash, Airbnb reports earnings, Fortinet, Energy Transfer, Honda. Where's MetLife? I think MetLife reports too. MetLife, yeah, we use MetLife. Did I see Coca-Cola? Oh, this is one of the bottlers. Anyway, lots of fun earnings tomorrow. We'll be live streaming for it. So, hey, yeah, if you want to hit the follow button, I'd appreciate that. By the way, watch out for people impersonating me. I don't sell anything. I have no course, book, Discord, WhatsApp, Telegram, literally nothing. Just on here, give my opinion. So, let's see. Is this available in the UK? I actually don't know if it is EZK. I think this app I'm using is only available in the US and Canada. I don't know. So I wish I knew EZK. Again, yeah, if you want to get this little broker I'm on, Linktree and bio, first link. You can use my affiliate link up there. Linktree and bio, first link. We'll both get some free stocks if you sign up and deposit $100. But anyway, free brokerage though. I like to keep my cash in here. Yeah, it's better than Robinhood, I think. If Robinhood, you have to pay $5 a month to get a yield on your cash. Well, this one gives you a 4.10% APY on your cash, and it doesn't cost you anything. It's free. So anyway, Moomoo is in the UK, I confirm. Awesome, Matt. Hey, cool. So yeah, thoughts on HIM's earnings? Yeah, let me look at that one real quick. What up, Luffy? Hope you're having a good Tuesday. So let's see. Oh, we can look at Apple Oven and Lucid too. What up? I don't love Lucid, but they did just have a $1.3 billion order from Uber. But here's HIM's and hers. So they had a weird candle. I mean, they originally loved it. The stock went up to 64, and now it's back down to 55. So something happened there. The one thing that scares me is they lost their partnership with NVO, so they no longer sell a weight loss prescription. That was a huge growth driver for them. A huge growth driver for this company was their weight loss prescription, and now that's not there. So that's one thing that's going to affect future growth. So here's the thing. They slightly missed on revenue, beat on net income, slightly missed on EBITDA. Well, actually a big miss on EBIT. But anyway, still, everything looks great. I think they acquired some company or something. I don't know how this happened. They must have done some acquisition. I don't know. But there's some reason for that. Anyway, they're really profitable right now, making close to $200 million a year. Revenue, still, until this goes away, this might still be a buy. Revenue's up 72%. Free cash flow went negative, so they must have invested in something anyway. But platforms, hey, Marcus, again, if you want to get this little platform I'm on, this broker, it's in the link tree in my bio, that very first link there. Oh, and another cool thing, you can track like all the super investors' portfolios, like because they have to reveal all their holdings by SEC law. So we can see like Nancy Pelosi's portfolio right here, all her trades. Yeah, if you want to get this free brokerage, it's in the link tree in my bio, first link for the affiliate link. But yeah, we'll look at a few more stocks and then I'm going to head off, man. We've been streaming for 3 hours now and my head is hurting. But we'll be for sure streaming tomorrow for the earnings. Duolingo, let's check that one. And Open Door Technologies, hey, I'm not going to analyze Open Door, but I'm glad I didn't buy it. Well, I never considered buying this one. This one just has no good fundamentals. Stock's down 21%. They just lose a bunch of money. I think there's real bankruptcy risk here. So The stock fell 21%. So imagine this market cap is 21% lower. So it's really like a $1.35 billion market cap. So the company's worth $1.35 billion. We're buying a company that loses nearly $100 million every quarter of net income. So that's the bad part. They're burning money hand over fist. They're begging for a low interest rate environment. Duolingo, yeah, let's go check that one out. So Duolingo has really impressed me. So if anyone's heard of that language learning app, Duolingo, they're kind of on sale right now. I mean, look at this. They've had a nice little downtrend to maybe pick up some shares if you're looking and interested in this stock because this is so growthy. I actually don't know why the stock has been hurt so bad because they're so great. Like, look at this. The subscription revenue, look at these year-over-year growth rates. It just grows 50% every quarter, every year. I don't believe it. So extremely high growth on the subscription model, which is all recurring revenue. And also, they're an advertising play. It just bumped up 38% year over year. I mean, it's a smaller portion of the revenue, but still, advertising, it's cool that they're in that business. And also, the free cash flow was 100 mil, up 30%. Net income was 35 mil. Everything looks great at Duolingo right now. So yeah, let me know what you think about them. I love that subscription growth. What do you think about AppLovin? Oh yeah, let me get to AppLovin. I forgot to get to some of these. Sorry. Yeah, so they said water supply stocks would be huge. Would you recommend an AMZ for the Roth IRA? AMD or AMZ? Maybe I can check out AMZ. So replacing employees with AI, do you think they'll ever survive? That is one thing I heard. Like Microsoft is making, like with AI, ChatGPT, it's making like a Duolingo competitor, like another language learning app. So there might be they just have a commodity. Like why would people choose Duolingo maybe over another free alternative that might be easier in the future? That the thesis could be hurting there on Duolingo. You're right. But for right now, the fundamentals look great. And here's AppLovin right here. This is ticker symbol ABP. This is a huge advertising play. And check this out. 80% of the revenue comes from their advertising business. It has boomed. It is up 71% year over year to $1.16 billion, a record revenue. And not just record revenue, but record profits and free cash flow. It's up 111% to nearly $1 billion of free cash. I mean, in just one quarter, it's ridiculous. At this growth rate, what's it going to be this time next year? So that's why, if you're wondering, how does a stock literally go from, $29 to $300? Insane growth like this, insane profitability. I mean, look at the net income as well. I mean, let's just zoom out to a year ago. I mean, look, 2022, no net income, negative net income. Then 2023, net income hits a new record, 400 mil. Now it's 500 mil anyway, up 144%. Incredible growth on AppLovin. They deserve the high premium because they're so growthy. Making a lot of money too. Let's see. Check out. Thanks for publishing. Hey, thanks, Sarah. Thanks again, Mouse, for all the super chats. I really appreciate that. And the TikTok donations. Let's see. Oh, Amazon. Yeah, hey, Amazon, look at this. He said buy and hold portfolio. Amazon would be perfect for a Roth IRA or a buy and hold portfolio. Look, if you can look right here, I actually call this my buy and hold portfolio because once I buy a stock in here, I try to never sell it. One of the positions I chose is Amazon. And not only that, I actually bought a share of Amazon today. So, there you go. Again, not financial advice. I wouldn't just follow me into that one, but I think Amazon is one of the better stocks to just buy and hold forever. No real reason to sell out of them. I think they're so innovative. They literally invested $40 billion just this quarter in new companies and new products to get a return on. It was crazy. All right, so let's see here. BRKB, let's check it out. So BRK, so Berkshire Hathaway, this is Warren Buffett's company. It's kind of been struggling recently. Because it's kind of like an S&P 500 alternative. A lot of people buy the Berkshire Hathaway instead of the S&P because it historically actually outperforms the S&P. Warren Buffett's been a good stock picker. Unfortunately, about a month or two ago, Warren Buffett stepped down. He's no longer the CEO. He still works for the company, but he's no longer like the main man. But the assets are still great. I mean, if you heard of Geico before, they own Geico. 28% of the revenue just comes from Geico. I love how diversified that they are. They're like an ETF in one. They're in manufacturing. They're in the railroads, BNSF Railroad, McLean, Pilot. I mean, all these industries I love. But maybe the stock fell because of this net income miss. The net income fell by 60%. Maybe analysts weren't expecting that. I don't know. So that's interesting. Check out Unit Software. What's the ticker symbol for that one? You talking about Unity, maybe? Yo, what up, Ryan? What's up, brother? Didn't he sell recently? I don't know. We can see Warren Buffett's portfolio. So this isn't Berkshire Hathaway. So we just looked at BRKB, which is Berkshire Hathaway. This is Warren Buffett's like individual portfolio. So Warren Buffett himself, these are his holdings. Warren Buffett, I think, sold some stock, but I don't know about Berkshire Hathaway. Again, or it's the one way or the other. I don't know. How often do you do these lives? Hey, I try to go live every day if you want to hit the follow button. But look, his largest holdings: Apple, Amex, Bank of America, 10% in Coca-Cola, a lot of the higher yielding names, and some of the oil stocks like Chevron, 4% yield. Oxy, another oil play he's been betting on. Kraft Heinz, Chubb, the insurance company. So, anywho, that's his portfolio. Let's see. I think BRKB could be a huge win. Yeah, I think so too. Berkshire Hathaway probably should just return a little more than the S&P 500 every year, maybe 8-9% a year on average. BRK also owns all the Pilot. Oh yeah, that's what Pilot was. Really, Pilot Truck Stops, a growing industry. That's really cool. It'd be a cool IPO. Has anyone heard of Buc-ee's before? It'd be really cool to see Buc-ee's go public. I don't know why I'm typing them in because they don't exist as a stock, but yeah. Anyway, what happened to BRBR? I don't know. Let's check them out, dude. Bellring Brands. Hey, dang, they're down 30%. This is the company that owns whey protein, I believe. So, dang, they're down 32%. Let's check on the news. Let's see what the news said. It looks like they lowered their guidance. Tariff for dairy protein to hurt in Q4. I thought tariffs were over. I guess they're blaming it on something. Well, let's see what they report. Yeah, huge net income miss. They're expecting 50 cents of EPS. They only made 16. So analysts were not expecting this 71% year-over-year decline. So yeah, they own shakes, powders. I think it's whey protein that they own. I'll verify that for you. Where's Premier Protein? Okay, it's not that one. It's Premier Protein and Dymatize. Oh well, I don't know. Anyway, that's a tough industry. Let's see. And yo, what up, homie 307? Hope you're having a good Tuesday. Yeah, by the way, I'm probably about to end the stream here. So, by the way, if y'all want to hit the follow button, we're going to be live tomorrow for earnings. We got McDonald's, Disney, a lot of fun earnings. Today, we had some losers. Powell Industries is down 13% right now. So, RIP my position. That lost me nearly $300 today. So thank you. And also we'll say thanks to Supermicro and AMD. We're down, another 200 from that. But luckily we have a diversified portfolio, so we are good. And if anything, I'm ready to buy the dip. I do got some cash on hand. And finally, I'll show you my Robinhood portfolio. And by the way, before you go, best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I'm also streaming on there. And when the stream's over, you'll be able to replay it when it's over. So if you miss anything and want to replay it, check out the YouTube channel stream. So it's called Nathan Robert. Just type in YouTube Nathan Robert, or you can go to the link tree in my bio. First link, one of the links there. Where AMD earnings bad? I didn't look at AMD earnings yet because they just came out, but I'll probably check that out tomorrow. We'll be deep diving into all that. Let's talk about it. But yeah, and in this portfolio, we're down 1% on the day. So anyway, that was the stream. I lose on earnings all the time, for real. That's why it's tough to. That's why you don't. That's why you don't bet before earnings. And if you're gonna buy a stock, you're gonna buy it through the earnings dip. You're just going to buy and hold it for the long run. Hey, Sunshine, thanks so much for the roast there. Yeah, thank you all. Hope you guys have a great rest of your day. I'll quickly pull up what companies report earnings, and then I'm going to dip out of here. Dang, this is, I think, my first stream ever. We're over 3 hours live. I think my longest stream ever. So thank you all for being here. Yeah, tomorrow we get Novo Nordisk, which is Ozempic, and Wegovy, that weight loss company. Disney, I own a lot of them. I own a lot of McDonald's, and then Uber, Shopify, Apple, and DoorDash. So yeah, come to tomorrow's stream for the amazing earnings, and hope you guys have a great rest of your day. I'll see you guys in the next one. Have a great day. Hey, hit the follow button too. And hey, thanks so much again, Mouse, Sereth, for all the donations. I really appreciate you. Jason Fields, do you just do stocks? Yeah, I mainly just do stocks. I don't actually own any crypto whatsoever. So yeah, see you guys in the next one. Make sure to hit the notification bell for tomorrow's stream. Yo, Eric M., thanks so much. Thanks, Sereth and Mouse, for I'm going to just call you Mouse. Thanks again for the $5 super chat and all the TikTok stuff. I really appreciate that. See y'all later. See you.